South Usman Khan's Street. South. Yes, sir.
आप देखिए ना
One is for human tongue. It's a EVP.
इन्होंने साइन कर दिया है जी
मैंने कर दिया मेरी मेल आईडी पड़ेगी उसमें सर्टिफिकेट हाँ इसमें आई डी कार्ड वगैरह आई डी वगैरह इसमें वो मटेरियल सब कुछ है अच्छा मटेरियल
Yeah, my name is Deepening.
हो गया सर किट ले गया
बैग दे दो बैग पकड़ा दो मैडम बैग दे दो
अरे वो तो लाल क्यूआर कोड कहाँ भेजा है आ गया
लास्ट में आए पीयूष सर आए हैं ना Exactly. I don't deny that.
Welcome you all to this conclave, Deepening Financial Inclusion through Micro-Housing Finance. Please come inside, please. I now invite to the dais Sri Gaya Prasad, Deputy Director General Rural Housing, Ministry of Rural Development, Government of Orissa. Please come to the dais. Okay.
Next is Mr. Vishal Goyal, GM, National Housing Bank. Welcome to the dais, sir. Sri Gaya Prasad, Deputy Director General Rural Housing, Ministry of Rural Development. Mr. Vishal Goyal, GM, National Housing Bank. And Mr. Gigi Ramin, ED and CEO, Sa-Dhan. I request Gigi sir for the opening remarks and welcome address. Please, sir.
Good morning to you all. Good morning. Good morning. Good morning. Respected Gaya Prasad ji, Vishal. Let me first of all welcome all of you for this today's conclave on deepening financial inclusion of micro-housing finance. We have deliberately mentioned it as financial inclusion. Although many a times, when you talk about financial inclusion, people think about only opening a bank account, or maybe having an insurance, or maybe payment mechanism, those kind of things. But we also feel that housing is also a part of financial inclusion. For a poor, having a house, or for that matter anybody, not only poor, for anybody, having their own house is something of a self-respect, I would say, something of confidence-giving measure. Yesterday, one of my colleagues came to me and said that she wants to buy a house. And she said that when I am looking at the cost, I find it is not very economic.
It's not working? No. Okay. Sorry. So I was telling one of my colleagues came to me and said that she wants to buy a house, and she said that seeing that cost, I find it not very economic, because spending so much money, with that interest, I can have a better house on rent. But when I'm looking at emotionally, I feel I should have a house. So it's not the economics basically, it's more a emotional and I would say a confidence building thing to have a house. Of course, housing itself is required. If you don't have sufficient number of housing, people, how where do they live? Get them protected from the elements of nature, to have safety, a proper housing is very much required. And this is something which everyone aspires for. We find that housing for the poor sections is a major challenge as far as the country is concerned. Affordable housing is something which everyone is talking about and looking for. There is a big gap as far as the requirement and availability. The shortage at the moment is said to be around 10 million. And by 2030, they say it will be somewhere around 31 million. This being the situation, how do we address this? In fact, I was seeing one data which was saying that in the last 9 months, from January to September 24, 2.29 houses were sold, affordable houses were sold in the country. But I also saw a data, in fact it came in the yesterday's Hindu Business Line also. There is a dip as well as the number of houses sold is concerned. I'm told that it is around 1 lakh less than the previous year's number. Is it because of the not required, they don't require the housing, or is it because the requirement has been completed? No. I think probably there is also a cost aspect in it. The cost of the affordable housing is becoming not affordable to the people, making them not to go for that. So there has been a reduction of almost 1 lakh units sold over a period of 1 year. So this being the situation, how do we address that? So housing is a necessity. People need house. But cost is an area which probably they are getting challenged. Thankfully, Government of India has come out with an Mr. Gaya ji, who is sitting with us. He is one of the architect and person leading that scheme of Pradhan Mantri Awas Yojana, both urban and rural. And I was just seeing the data which was saying that around 119 lakh units of Pradhan Mantri Awas Yojana urban units were sanctioned, of which 112 units have been grounded and 90 lakhs are coming. Similarly, in the rural areas, around 332 lakh units were targeted, 320 lakhs have been sanctioned and 267 have been completed. So it's a huge housing program which is happening, but still the needs are very high. And here I would like to bring to the notice of Gaya Prasad ji that a microfinance institution in the country plays a major role as far as the financing of the poor is concerned. Microfinance is a activity which supports the financial inclusion, which supports the poor people to access credit. Most of the people who have not been able to access credit from the formal formal financing mechanism, microfinance is a major solace to them and a source of funding to them. In our country, we have, if you see the number of microfinance institutions, we have around 200 microfinance institutions, supporting more than 8 crore poorer households. And the total loan given is somewhere around 4 lakh crores. And for the purpose of housing is also, they have been supporting. But one of the biggest challenge which the microfinance institutions face is their funding requirement. See, right at the moment, none of the microfinance institutions can source money from the, by way of taking deposits. They have to borrow money. So it all depends on how much borrowing cost would be. So they borrow money from banks, financial institutions, NBFCs, and then lend to the people. So there is a cost of borrowing. Then of course the operations of the microfinance institution is such way that they deliver the services at the doorstep. So they have an operational cost, higher operational cost. Money is given in non-collateral way, without any security. It makes the cost more because of the risk involved. And finally, there is a margin for requirement. So in that process, the pricing of the microfinance generally comes around 24-25%. And for a poor person to get money at 25% and invest for the housing would be a bigger challenge, I would say. So I would request, and in the Pradhan Mantri Awas Yojana, as I understand, there are the subsidy given by the government is somewhere closer to 1.8 lakh per unit, and the cost would be anywhere near to 4-5 lakhs at least. So the remaining money has to be sourced in the form of loan either from the banking system or some other source, and many times microfinance becomes a source to them, and the cost at which they borrow may not be very affordable. So I would request the government to kindly consider whether there can be some mechanism, either one, increase the subsidy, plus also support the microfinance institutions by giving some kind of a softer loans, so that they can deploy the money to the poorer people with a lesser in cost of funds. We have an experience of working with NSFDC. NSFDC, you know that it's a corporation for the SCST, where banks are the major channel partners. So we, through our policy advocacy mechanism, we requested the NSFDC to make microfinance institution also a channel partner, because they work at for the poorer people, for the weaker sections, the target segments of the NSFDC. So we did a pilot last year. They provided some funds at 5% and put a cap that they should not lend more than 15%. And we were able to lend that, and it was a successful model. So similar kind of a model can be developed even in the housing. If a dedicated funding mechanism can be given to the microfinance institution. First of all, microfinance institutions should be considered as a partners to this funding mechanism, and if they can be given a funding source, I'm sure these programs can be worked out better. And as I said, the requirements are there, money is not there. If money is available, the cost is a problem. So if the cost can be reduced in the form of some way of either giving a dedicated funding mechanism or a subvention mechanism, that will make the things much better. So I'm sure today's deliberations, considering the need of the country, need of the world for the housing, and especially in an era where we are facing the challenges of the climate. When you have a climate-related events which can cause havoc to the housing, we need to have Pakka houses, climate-resilient houses, for which you need money, you need funding mechanism. So I would request the government and the other concerned authorities to look at that option of making microfinance institutions as also a part of this program, giving them the sufficient adequate funding support, and making this financial inclusion through housing finance much more meaningful. I'm sure today's deliberation will help us to understand more about this and get a much kind of a way forward for our future actions. I welcome Prasad ji for this program and thank him for his time for being with us. As I said, he's an important person as far as the government's PMI program is concerned. We would be able to get his insights. We have also Vishalji from National Housing Bank, which is very important component as far as housing is concerned. We have Mr. Patrick. Welcome you. I welcome each one of you for this program and hope and wish that this deliberation will make it meaningful and come out with some concrete way forward for all of us. Thank you once again.
Thank you, sir. I now invite Sri Gaya Prasad sir, Deputy Director General Rural Housing, for his keynote address.
Where we are actually fighting and struggling to provide some loan product to the beneficiaries of the PMAYG. I will focus my discussion, though the time is given to 15 minutes, but I will try to finish within 15 minutes, but it may extend up more than, I will take around 20 minutes. just to explain, because this is the area I need, and please feel free to raise the issue, and we know what are the challenges for the PMAYG, because I am looking after the PM Rural Housing Scheme. Urban is being looked after by the Ministry of Housing and Urban Affairs, and Mr. Kuldeep Narayan is my good friend. He is looking after the urban. But though the scheme was launched in year 2016 with revised targets, with revised interventions, because you know, for a scheme like PMAYG, we have to know who are the beneficiaries, how to go for identification of the beneficiaries, because this country has around 150 crore population. That's very easy. And you see, since independence, we have so many schemes, rural housing schemes. Earlier it was part of the Jawahar Rozgar Yojana, then that is Indira Awas Yojana, and this is the Pradhan Mantri Awas Yojana Gramin. But how this scheme is different, what are the management structure, how we are using, how we are providing the funds, we'll try to highlight and then request and then also point out my area of concern. Because recently we had a very good workshop in collaboration with the World Bank, where we have discussed, because I am very fortunate, because I am engaged, I am a part of this scheme since inception, almost inception. I joined this scheme in year 2017. And the scheme was launched in year 2016. So I know my strength, weakness and opportunities, and will try to, because these are the experts and the MFI present in this room are going to play major role in improvement of the PMAYG. I know, because and then so this is the figure. You see, CEO Sa-Dhan has raised that how many houses we have constructed, what is the target. The PMAYG is different from Indira Awas Yojana, because we know who are the beneficiaries. And when this scheme was launched in 2016, we decided who are the beneficiaries. Then you may be knowing, in this country, we know the census, but another census was carried out in year 2011. That is called socio-economic caste census. I don't know how many are aware about this census, but this census has changed the implementation of many flagship programs in this country. Because if you know, when this report was published this census report was published in year 2015, then PMAYG was the first scheme to adopt the findings of this report. Because SECC 2011 has given lot of data, either it is related to housing, or related to health, or related to education, any sector. If you see, the most fortunate part is that Ministry of Rural Development was the nodal ministry for conducting this socio-economic 2011. And when we discussed, this country has around 140 crore population. If you see, around 18 crore rural households in this country, तो कितने लोगों को घर चाहिए? पहले सबसे बड़ा सवाल तो ये है कितने लोगों को घर देना है. If you see, earlier concept was BPL. Now, if you see any schemes, there is no concept of APL and BPL. Because this SECC has given this figure that how many out of 17.5 crore households, rural households covered under that census gives us that how many are actually living in the kacha houses. And this number was around 40 million. So this be 40 million, and when this data was shared, Prime Minister, the present Prime Minister had meeting before launch of the scheme. Then it was decided, this census was carried out in 2011, report was published in year 2015, so there is a time lag of 5 years. So isko let us share this list with the state, request them to go for further verification, physical verification of each household, so that we'll finalize the list of the eligible households, freeze and finalize, and then government decided what would be the final number as per the SECC 2011 to go for construction of the houses. If you see here 2.95 crore, how this figure was arrived? I am just giving the background, because SECC gives that out of 17.5 crore rural households, 4.03 crore households were living in either in 0 room, no house, or 1 room kacha house, or 2 room kacha house. So up to 2 room kacha houses, as per the SECC 2011, were captured under the PMAYG. These 4.03 crore households were shared with the states, requesting them to go for physical verification. And then, after due verification by the states and UTs, panchayat-wise, district-wise, block-wise, then they finalized and reported that out of 4.03 crore, only 2.95 crore were found eligible in year 2016. And in this way, the universe of the PMAYG was decided, and the number is 29.5 million, that is 2.95 crore. And the target was given to complete these houses in next 6 years, that is 2016 say up to 2022. But because of the COVID, the timeline was extended, and the target was to complete all these houses by March 2024. We have almost completed. Because of some, maybe aware about the Bengal issue, and that is why around 12 lakh houses are not yet started. But we have completed, saturated, all houses have been sanctioned. And the one thing I would like to just inform for you, though the name of the ministry, my ministry, Ministry of Rural Development, but we are the #1 in the central government, if you see, so far as use of IT solution is concerned. Since inception of this scheme, we have only one source of truth, that is the MIS of the scheme. All these details of the beneficiaries, panchayat-wise, block-wise, district-wise, all these details are available on our MIS system. Everyone, anyone can see from anywhere, and not only details are available, because we are releasing the fund to the beneficiaries in installments, generally 3 installments, and these installments are linked to the stage of construction of houses. And then, because सभी आप जानते हैं, if you release the funds in one go, particularly to rural people, it might be possible that they may utilize this fund for some other purpose. So that is why we are releasing the fund in installments, and it is linked to the stage of construction. We are capturing the land long of each house, photograph of each of the houses, and in this way, and then funds are released into the account of the beneficiaries. किसी को कोई मतलब हम लोगों के पास in PMAYG or in other schemes also of the rural development, funds are released to the account of the beneficiary, and now we have moved from DBT to Aadhaar payment bridge. So now none of the beneficiary under PMAYG, we don't have any luxury now to allow any beneficiary or any state to release fund to DBT. So the Aadhaar payment bridge, and this is as per the Union Cabinet. So this is the progress. Now this current financial year, government has also approved construction of 20 million more houses in next 5 years. Because we are using one, I explained about the SECC 2011. This list is fully saturated. Now none of the eligible beneficiaries in SECC 2011 is in the waiting list. But when we saturated this list, then government decided कि बाबा इसको नए लोग भी तो जुड़े होंगे because of the increase in the family size or in the households. Then another survey was conducted that is called Awas Plus 2018. So we are using this Awas Plus 2018 list for extending the benefit of the rural housing to the beneficiaries. And one thing I would like to inform this gathering that we are also, the government has also decided again to go for fresh survey because we are going to construct 20 million more houses, so we don't have the sufficient number in our waiting list. And this time we are using in this country, this is the first large scale survey that this ministry is conducting. We are using face-based authentication. I don't know that how many schemes are actually. आप DG यात्रा वगैरह में तो आप देखते हैं ये सब हो रहा है. But so far as scheme is concerned, PMAY is the first one. We have developed one mobile app that is Awas Plus 2024. Honorable Prime Minister has already launched this app in September and survey is on. So we are capturing the Aadhaar number and face authentication, and then we are identifying the correctness of the households, and then also capturing the lat long etc. for conducting the and identifying the beneficiaries. This is the physical progress if you see of the scheme. So we have this number indicates that we have lot of opportunities. This one. This is the most important slide for PMAYG. If you see, who are the eligible beneficiaries? What are the criteria being used by the beneficiaries for identification, Ministry for identification of the household? This is the left side is the old criteria that were used in SCCC 2011 and Awas Plus 2018. But if you see landline, this 9th and 10th, रेफ्रिजरेटर एंड लैंडलाइन तो कहीं होता नहीं, आप खुद ही देख लीजिए, शहरों में लोगों ने हटा दिया. So that is why these two, and if you see the two-wheeler have also been removed, but because two-wheeler has become the part of the life of the rural households. So this, and that is why we have also rationalized the land criteria. So, and the final one, right side of the slide, is the 10 exclusion criteria that we are using for identification of the households in the present survey. And this, suppose if any member of the family is earning more than 15,000, up to 15,000 is allowed, but more than 15,000, their name must be excluded from the list of the beneficiaries. And the other criteria, paying income tax, paying professional tax, have 4-wheeler, 3-wheeler, and also the KCC is more than 50,000. So this is the criteria.
15,000 per month is not excluded or what is it?
Up to 15,000, any member. Here important point is any member. Suppose if any household has 4 members, and they are earning 10,000, 12,000, 13,000, and 9,000. That household is eligible. But if any member earning is more than 15,000, earlier it was 10,000, this time they have enhanced to 15,000. PMAYG, we are not only focusing on construction of the houses, we are converging in a big way with other schemes of the ministries and central government to extend the benefit of like without toilet, none of the houses is rated as complete. The toilet is an integral part. Also, the LPG connection, Pradhan Mantri Ujjwala Awas Yojana, we are converging with PMUY through API to get the benefit of the scheme. When the house reaches up to the roof level, then our MIS, that is Awas, send the signal to PMUY MIS that this house is eligible to get the benefit of the gas connection. Similarly, Saubhagya scheme for electricity connection and Jal Jeevan Mission, you knowing there is a flagship program of the government, and we are converging with this scheme to get the water connection from the. Similarly, now one scheme you will be knowing, this National Rural Livelihood Mission, or mission of NRLM. And if you see NRLM, anyone has any guess what is the bank linkage? You know, we have around 90 lakh self-help groups covering around 10 crore rural women. If you see, bank linkage is more than 9.8 lakh crore. And in PMAYG, अभी मैं बताऊंगा कितना बैंक linkage है. One side, for 10 crore people, bank linkage is around 9.8 lakh crore. But in PMAYG, we have already constructed around 3.5 crore houses, and bank linkage तो मुझे याद नहीं आता है. That is why I am here today. I know the challenge because now, so this is 120,000 we are providing, and this unit cost is since beginning of the scheme, that is 1st April 2016. But today we are in 2024. Though when we approach to this extension of the scheme for 20 million more houses, our proposal was to increase this unit cost from 1,20,000 to at least 2 lakh. But government considered it, but it was not approved by the Union Cabinet. That is why the role of the MFI here, because one way target has increased, but without revision of the unit cost. 12,000 is, and we are also converging with MGNREGA, Narega scheme, to provide the 90 days or 95 days unskilled wages. That would be around 27,000. So if we add all these, the total cost for a beneficiary is around 160,000. But 160,000 is not sufficient. Besides this, the states are also providing some top-up. Unit cost, one way we are providing unit cost sharing model, this 120,000, 160,000 is shared between center and the states. Like if any house is constructed in Bihar, the 60% from central government side and 40% from the state side. So this is the unit cost, and in cost, states are also providing top-up. Because like if you see Tamil Nadu, we are providing 120,000, so 40% of 120,000 is being provided by the state, and in addition to this, they are also providing 120,000 over and above the 120,000 from the state resources. In like Kerala, they have their separate housing schemes, that is called Mission Life. They are providing around 5 lakh rupees. Telangana has a separate scheme. Andhra has also a separate scheme. Besides this PMAYG, many states they have their own state housing scheme and providing the funds more than the unit cost. State top-up I have already discussed. Convergence is another area, and the last bullet is very important. And here the role of the MFI project. Since beginning, it is written that this 70,000 loan to be provided to the beneficiaries of the PMAYG, willing beneficiaries. If anyone is willing to avail the loan from any financial institution, either public sector banks or any banks, so the loan may be provided to this. But it varies from state to state. Tripura, they have approached some to Tripura, the beneficiaries are getting. Madhya Pradesh has also taken up this issue with some bank, and they have given the security and surety. तो वहाँ भी हो रहा है, but in other states ऐसा कुछ हुआ नहीं. And मैंने पहले ही कहा, we are releasing fund to the states, and states are releasing fund to the beneficiaries. But we have only one. Each state has only one account, and you know that the funds are released through fund transfer order to the beneficiaries. So, and funds are released in 3 installments, I have already stated. And then these are linked to the, we are capturing net long. So we have 5 photographs of each house. One, once the house is sanctioned, before sanctioning we are capturing the demographic details of the beneficiary, and 3 important information for PMAYG. We have mobile number of each beneficiary, we have Aadhaar number, and we have bank account number, besides other demographic details of the beneficiary, and we are also capturing the lat long of each house. And 10-meter deviation. Suppose house, at the time of sanction of the house site is this one. So beyond 10 meter is not allowed. If anyone is going to construct houses beyond 10 meter, the system will not allow to upload any photograph here. And this is, we are using one MIS, that is Awas Sap, another mobile app for capturing the details, that is called Awas app. Awas mobile app. So using these 2 IT solutions, the progress of the schemes, and this is being done by the panchayat level functionaries to generate the fund transfer order, then release the fund, capture all these details, and then it uploaded on the Awas app. And DBT, single nodal account, then promoting bank penetration. And one important thing, the houses are sanctioned in the name of women only. If there is no women member in the household, then the house is sanctioned in the name of male. Either jointly, so more than 74% of the house is sanctioned jointly in the name of men and women. And then I have already explained converging with self-help groups to provide employment opportunities, and also many independent studies like Niti Aayog, the National Institute of Public Finance and Policy, and other, they have reported that this scheme has generated direct and indirect employment opportunities in the rural India. Because if you see, suppose we are going to construct 20 million more houses, the requirement of cement would be more, bricks, and the other. And also, rural masons. Rural masons is the area. We are, one way we are going to construct the houses, the other way we are also providing training to the rural masons so that quality of these houses would be better. These are the challenges. And here are the roles of the financial institutions. Insufficient loan कुछ नहीं हो रहा है. तो ये एरिया है. अगर आप if we compare, I had discussion with Manikandan, and Manikandan has given a lot of good idea to the ministry. That is why we are going to be तो one loan, तो loan कैसे मिलेगा? If you see, if you compare urban and rural, तो urban beneficiaries, they are getting the loan facility and in a better way as compared to PMAYG. तो PMAY rural में loan कैसे मिलेगा? We have tried a lot in the past, but ये नहीं है. दूसरा, अगर आप सोचिए PMAYG में basically beneficiaries are poor. They don't have the sufficient documents. They don't have the repaying capacity. Their income is another criteria. That is why these banks, public sector banks and other banks, are not willing to give loan to them. But if you see, and then also interest rate is another area, high interest rate. And also if you see the awareness about the financial loans, etc. And then these are the basically issues. But one thing I would like to, there is a need, there is a demand. When my team is here, recently we visited one state that in Assam. I was interacting with a beneficiary, old lady. Her house was built, very good house. I asked a simple question from that lady. आपने ये घर कैसे बनाया? उसका एक statement is very important. उसने कहा कि साहब हमने सब कुछ बेच दिया, केवल अपना तन नहीं बेचा। मेरे पास एक गाय थी, मैंने उसको बेच दिया, मेरे पास कुछ अदर ज्वेलरी थी, उसको मैंने बेच दिया। तो इन दिस वे the beneficiaries of the PMAYG are constructing their dream houses, but we are failing, I think, someday. Even I being the scheme head in the ministry, I am also feeling sometimes hesitant and then how to go for providing the loan to these beneficiaries, because one way we are providing subsidy, states are providing top up, we are also converging with many schemes, but that is not sufficient, because 25 square meter size of house nowadays it's next to impossible to go for construction of this house size within the given unit cost. One thing, because one scheme of the ministry has already paid, I would like to just quote that scheme. One scheme is called Rural Housing Interest Subsidy Scheme. I don't know that how many are actually aware about that scheme. The ministry, this was launched by the Ministry of Rural Development, but the purpose was that scheme to provide the loan of rupees 2 lakh to the beneficiaries outside the PMAYG. PMAYG के लिए we are giving this unit facility, but the nodal agency was Mr. Goyal is here. The nodal agency, central nodal agency for implementation of RHISS is the National Housing Bank. We released the fund around for 50 crore, but utilization of this 50 crore, I think around they have utilized 10 to 12 crore in the last 8 years. Finally, because no one was willing, it was very difficult to increase the outreach of the, so we approached, but finally we could not succeed, and that scheme is now no more. So, but we want to this time, we have, and in the past I have also approached to go for development of a separate loan product to provide, because providing collateral to the PMAYG beneficiaries is very difficult. So we also approached to DFS and NCGTC, Mr. Vivek Pandey, CEO. I had detailed discussion, we developed a loan product, but that has created some additional burden to the scheme. And finally, Ministry of Finance has not agreed to the proposal of the ministry, so that loan product is also not available for the PMAYG beneficiary. But because now we are going to construct 20 million more houses in the next 5 years, so we have to have some loan facility to these beneficiaries. That is why my whole team is here today, to listen you, to orient to, these are the challenges. I request you all to please provide us some solution. We are ready to join you in any form to extend the benefit of any loan to the PMAYG beneficiaries who are actually needy one and residing in the rural area of this country. So that's all from my side. Thank you very much for your attention.
There is a request, EPO people can be here during our, there will be a discussion. So EPO people would be here, your officers would be here.
Ashish Shinde, Joint Director, he is looking after the scheme. Chahat Singh, another Assistant Commissioner.
Thank you very much.
2-3 more officers.
Okay, okay. If they are there, then we can also discuss together. Thank you.
Thank you so much, sir, for elaborating this PMAYG.
Now please.
Do you have a presentation? No.
Yes, sir.
Come, sir.
And also, sir, has acknowledged the role of microfinance institutions in the extension of that scheme. So now I invite Ashish Goyal, sir, to give his perspective. National Housing Bank, GA.
A very good morning, everyone. First of all, let me thank Sa-Dhan and the Habitat for Humanity, who have organized this particular conclave and are looking at financial inclusion through the micro housing finance. So I just take you through some of my thoughts which are there. As you know, the National Housing Bank works as a principal agency to promote the housing finance institutions, both at the local and the regional level. And we have actually over the last 3.5 decades made considerable strides in trying to broaden the housing finance system on sustainable and sound lines. NHB broadly has 3 roles. One is its financing role, wherein we have our refinance scheme, which is applicable to the housing finance companies and the banks. Unfortunately, our mandate does not provide us to lend refinance to the microfinance institutions. And this is one major source of funds which is at low cost and at long tenures. And we have cumulatively disbursed more than 4 lakh crores over the last 35 years. And nearly 84% of this disbursement is to the housing finance companies. I would also like to mention here that NHB also provides a lot of concessions when it comes to refinance. So whether it is for rural housing, it's for green housing, or for women housing, or loans for aspirational districts, or small size loans of 10 lakhs, we give a certain basis point reduction in our normal lending rate. The other aspect is that we are also the nodal agencies for many of the central government schemes. As Priya Prasadji, who's also on the board of the National Housing Bank, mentioned that we were the nodal agency for the RHISS. We are also the nodal agency for the credit linked subsidy scheme, which now is the inter-subsidy scheme, urban, under the Pradhan Mantri Awas Yojana urban. We are also the nodal agency for the Urban Infrastructure Development Fund, which has come into play since last year, and also the Affordable Housing Fund. Affordable Housing Fund is also something that we get from the Reserve Bank of India, in which we lend to certain segments of the society at very competitive rate. The present rate is 5.8% with certain terms and conditions. The next area is that we are also the supervisor of the housing finance companies. Earlier we were the regulator also, but now we remain as a supervisor of the housing finance companies. And as of date, we have 91 housing finance companies, and their branch network is more than 9,000 branches spread across the country. They are majorly concentrated in the south, west, and the northern. There are certain gaps in the eastern, but we are trying to relook at that how we could increase the housing penetration in the eastern and the northeast regions. And because of that, even when it comes to hilly areas or the northeastern regions, we give a good concession for our refinance also, and also under the Urban Infrastructure Development Fund. And because of many of these efforts that NHB has done, if you look at housing loan as a percentage of the GDP, we'll find it that it's become around 11% as of March 2024. And the individual housing loan outstanding of the entire sector as on December 2024, it's somewhere in the range of 35 lakh crore with a year-on-year growth of around 14%. And the major constituents of this particular segment are the housing finance companies, which constitute around 19%. Earlier it was 35%, but since HDFC has merged into the HDFC Bank, so it's come down. The public sector banks have around 43%, and the private sector have around 37%. And if I look at the housing finance companies' outstanding individual loan portfolio, you'll observe that around 40% of it is towards the EWS and the LIG. So that is a considerable part, and I think NHB does take a little credit for it, because some of the incentives that we give to these housing finance companies is considerably impacting the ground. As Sir mentioned, there is a considerable housing shortage available both in urban and rural areas. And that is exactly why the role of the microfinance sector becomes important. The housing finance companies are also lending to the MFIs through certain line of credits that many of the microfinance institutions receive. And considering that the client base of the microfinance requires certain innovative products, certain services which have to be delivered on to them door to door, many of the housing finance companies over the last 5 years have actually rechanged their strategies and their models, and they are catering entirely to the affordable housing segment. But there still is a need for a lot of funding which is required. And I think one innovation that the Reserve Bank of India along with NHB has come out is regard to the co-lending model. The guidelines were introduced by the Reserve Bank of India in 2018-19, in which a bank along with an NBFC, which could be an MFI also, could actually do co-lending for housing. The advantages of co-lending would be sharing of risk, loan origination and servicing. So the cost of the funds which is available with the bank is definitely much less than the cost which is available to a housing finance company or an MFI. So once you combine those two rates, so you could lend at more competitive rate. The reach of the MFI door to door, that would be an advantage to a bank. So I think there are two different models which are available for the MFIs for co-lending. So I would request, I think if Sa-Dhan can actually work on this co-lending model, and NHB would be very keen to facilitate any of the partnership between the banks or the housing finance companies along with the MFIs. We would be more than welcome to facilitate that sort of yes, sir. The second thing is under the interest subsidy scheme, urban, you have the NBFC MFIs can also sign an MOU with one of the central nodal agencies, which would be NHB, HUDCO, or the State Bank of India. And the NBFC MFIs are eligible to participate in this interest subsidy scheme for housing. So I would request if the MFI sector is also made aware about this, because I was just having some discussions, so there was still some that there are, whether they are or not. But the NBFC MFIs, if you go through the Pradhan Mantri Awas Yojana guidelines urban, you'll find that NBFCs are also can participate under the interest subsidy scheme, of which NHB is one of the central nodal agencies. Some of the challenges that the rural people, particularly for housing, face have been highlighted by Mr. Prasad, whether it's verification of your income or clear land titles, or the financial literacy, or getting the direct benefit of certain schemes which are there and all that. So those are challenges that we all need to work together in partnership and in collaboration with each other. And I'm sure, I think I've seen the structure of this particular workshop or the conclave that you are. I'm sure the deliberations would come out with some ideas, it would throw up some ideas, and in case there are any suggestions for National Housing Bank or for the government, we would be more than welcome to take them forward and work on it together collectively, because I think some of these challenges we've been talking about for the last 20 years, and we need to move to the next step ahead and work out on those particular challenges. With these words, I look forward to what the deliberations would be in this particular conclave, and in case there is any issue or any area that NHB could partner or come into with some ideas or something, we would be more than welcome to take them forward. With this, I wish everyone all the best for this conclave, and once again, thank you to Sa-Dhan for inviting us and addressing all of it. Thank you very much.
Thank you so much, sir, for that appreciation, that assurance that we can partner with NHB also right now. Now I request the sir to present a token of appreciation to our speakers. Thank you so much, sir.
Come sir, hi sir. Can you
Please come for a group photograph.
come, Sa-Dhan?
Thank you. Thank you so much, sir. Now we move to the discussion. It is a fireside chat. I invite Dr. Sehgal to the dais. And Mr. Patrick McAllister, Director, Financial Policy and Regulation, Capital for Humanity International. To the dais.
It's good to see you once again in the domain. It's like you have been trained to Sa-Dhan and for this industry for a long time. And when I learned that you will once again come back to your habitat, I was very happy. You were getting old train to once again go. So Patrick, to introduce you, he is the Director of Financial Policy and Regulations, Habitat for Humanity International. Welcome, Patrick. Formal welcome.
Thank you.
So, I mean, although we were discussing a lot of things that what shall we be doing, and there are a couple of questions. Fireside chat is not always having a kind of interrogation. Fireside chat is always to get the understanding, larger understanding. And Patrick having the experience of different countries, it would be very great to hear from him about what emerging markets are doing. My first question to Patrick, a very basic question. Why housing? We know that income generation is one of the things we should be looking at. How do you see this in these domains that housing should come? What is your justification for it?
Thanks, Cyril. And thank you to Sa-Dhan and for inviting me here today. You know, I started my career working in mortgage banking, so as a straight up, mortgage lending to people to buy their homes in the United States. And then I got intrigued by this idea of financial inclusion and microfinance. And so I began working in the emerging market countries to understand how lower income people who can't access formal finance were actually financing their businesses and their lives. And from there, I realized that housing is something that all of these people are actually investing in. And they're all taking loans from any source they can to build and improve their homes. And so why housing? Because housing is so fundamental to every one of us. We all live in one, we have our families in our homes, It's something that we feel an emotional attachment to, as the previous speaker has alluded to. And I think if we can, as we always say, crack the nut of helping people to improve their homes, then we'll really be able to help them improve their lives. So that's why housing is so important. And I really appreciate this opportunity to have a fireside chat with you. And I think, you know, from hearing the previous speakers, one of the things that I really appreciate is having the government in the room. Because so often we have these conversations as a sector and we ignore the enabling environment. And that's like a fish ignoring the water that it's swimming in. You know, we are all influenced by this enabling environment. And we also have an opportunity when we can talk to the government to influence it. And so I think I really appreciate the opportunity of having the government in the room. It's something that's very welcome, and I really appreciated the sentiment from both the Ministry of Rural Development and the NHB to work together, because that's how we are going to crack this nut, is by doing it together.
Thank you very much. And one of the things I understand that your contribution of housing is for income enhancement. If you have a house, then you are much more settled and do the other things. I mean, it's really necessary. Like we had a movement, you know that for this, your Swachh Bharat movement for the construction of the toilet. It was amazing initiative of government. We are really looking forward for the support of government to carry it forward. You have a video or something you wanted to play?
Yeah, so I just thought, because we've just created this video and it speaks to this very issue, and so I thought maybe I would take the opportunity to offer you the world premiere of this video. It's very short, it's 2 minutes, and I apologize, we have different versions of it, and this is a version that actually was created more for an African audience. So it's just the voice that you'll hear will be more of an African voice, but the message is the same. I'll just move over.
Passion-based goals, impacting their health and well-being. These families must build their homes incrementally over years, sometimes decades, because the cost of improving their homes is so high. Loans that are specifically created for housing ease this burden by providing the right amount of money at the right time to make a home improvement for artists. They are paid back over an extended period with a comparatively low interest rate. But most adults in low-income countries won't qualify for a housing loan. They work in the informal economy, have unclear rights to the land on which they live, and therefore do not qualify for traditional bank loans. Instead, they tend to work with non-bank financial institutions, including microfinance lenders that generally do not offer housing loans. Non-bank financial institutions are regulated differently from banks, with restrictions on the size, length, and at times purpose of the loans they can offer, which limits their ability to make loans for housing. Regulators need to balance the risks and benefits of regulation. This is called proportionality. Sometimes, while aiming to protect depositors and borrowers, regulators can inadvertently limit clients' access to housing loans. But finance for better quality housing is a need that cannot wait. Financial regulators and policymakers play a critical role in establishing an enabling environment that supports housing finance. They do this through coordinating with government departments to promote responsible growth of the affordable housing finance sector, collecting and publishing data so everyone can better understand the housing market, encouraging green finance mechanisms that are inclusive and broad-based, and innovating new regulation that enables more people to access a range of housing finance products. Ensuring all borrowers have access to appropriate housing-specific loans is crucial. When they do, it's not just families who benefit. Financial institutions gain new footing in a growing market, communities become more resilient as financial inclusion improves, investors get access to a profitable asset class, and national governments see employment numbers and GDP rise, driven by households' growing demand for construction services. When policymakers and regulators provide a supportive environment, the market can ensure more funds flow to affordable housing.
Thanks. So, as you can see in that video, a couple of things are really critical. One is this issue of proportionality. So, it's something. Okay, so this issue of proportionality is very important, I think, for the financial institutions to recognize that the central bank and the NHB in this case, they have to balance what they can allow in order to maintain their standing with the international prudential norms of the financial sector. And so it's not so much a question of just, can you give me a loan for, a more affordable rate? Can you refinance the loans that I've made at a reasonable rate? It's a question of balance. And so I think the only way that we can actually get to a workable financial product for lower income people is if we have these very deep technical conversations with the regulator to make sure that we understand the issues of proportionality as they apply to very informally employed people. And that's a big challenge, and we deal with it all the time. But I think it's important for us to sit down together and understand where each other is coming from, because a lot of times these conversations are very one-sided. I need money at 5%, otherwise I can't make these loans. And well, we need a title in order to refinance your loan. And the conversation doesn't go anywhere. So we need to sit down together. And that leads me to think about this issue of the ecosystem. Right? We are operating in an ecosystem, and the Ministry of Rural Development is clearly aware of this. You can see it from their slides, right? They see that it's all interconnected, and they're working across a lot of different government departments. But there is an acknowledgement that what's missing here is a way to engage the financial sector into this ecosystem. And it's not an issue for the lower income people that are trying to build their houses. Right. And it's an issue for the financial sector and the government to sit down together and find the solution.
Yeah. I mean, I totally agree with you that what you think. Having experience of different countries working in the housing segment, do you have some examples of how creative these solutions are? If you can help us to understand what solutions in some countries have done, it would be good to understand that how the challenges were there, they have overcome, or they have created some good solutions for this housing. Scaling all these problems, problems would be there, challenges would be there, that's why we are here. So after scaling all those things, after removing all those things, they created something for, something for this your housing segment.
Yeah. So the solution has to fit the problem. And for example, you have to look at the macroeconomic situation in the country first. It all starts from there. As we all know, we can't finance things if we're not operating within the norms of the macro environment. So in some countries, for example, liquidity is a big problem. There's just not enough money in the system to allow it to flow to all sectors of society. And so in those cases, we work closely with the government, usually the central bank, to establish mechanisms, either liquidity facilities or securitization capacity, or covered bonds, in order to make more liquidity available within the system. But I don't think that's a problem in India. In India, the issue isn't.
In our segment we do have, in the micro segment we do have challenge, because our major fund, it is mostly your tied with income generation thing. So it's a challenge to get fund for water and sanitation, it's a challenge to get finance for this housing.
Yeah.
So what we do, the part of it, we always try to, because we support this your life cycle thing, right? So in life cycle also we need this housing. So we give housing, but because we don't get direct funding line, there is some problem, yes.
Right, so the issue isn't liquidity in the economy, the issue is a particular segment, and for that, I can give you the example of Egypt. So Egypt has developed an institution, it's called the Social Housing Fund, and all it does is ensure that funds are flowing to the lower income segment. So it's kind of like what the NHB was talking about, but without the restrictions that the NHB has, because this would be essentially a fund specifically for the lower income segments. And I think the reason they came to this decision was because they realized that the formal banking system, including the regulator, was challenged in trying to spread the same rules across the different segments of society. And so they created the Social Housing Fund, which is specifically for the lower income groups. So that's a structural change that the government was able to put into place and allow funding to flow to keep this one.
I'm loud enough. So what happens that, thank you for this one. Then NHP was also in our room. Is NHP still there? Yeah. Okay. So he was reading, so I couldn't see. So yes, now NHP, after our meeting, this Habitat for Humanity, and we met them, and there is a progressive discussion that how to build up a DC environment with this your housing companies and microfinance. The second thing, the next one, what I want to understand from you, that how this market is in the emerging market, how this housing is taking shape. Like we know green finance, there is a movement, it is going on. How this housing segment is doing in the emerging market?
You mean related to green in particular?
No, not now, afterwards. I'm talking about only housing, that how housing is taking shape. Housing related finance, housing related capacity building, housing related other things. Even rating also, I don't know, maybe something coming up.
Yeah, so I think there is an acknowledgement in, say, the last 5 years that housing is a critical component of the economy. And housing's contribution to GDP, I think we mentioned here, is 11%, which is, quite good, but not good enough. Compared to a lot of other emerging market countries, it's very good, but it's clearly not at the rate that it needs to be to ensure that the entire population is served in the housing sector. So there's an acknowledgement, I think, by all countries that housing is an issue. The other thing that we're noticing is with the pandemic, we saw inflation at rates that we hadn't seen in a very long time. Now, India is in a sort of a fortunate macroeconomic situation because inflation is somewhat under control and GDP growth is still higher. Real GDP growth is still positive. And so, you're in a fairly good economic situation. Many countries, including Egypt, are not in such a good situation because they're facing much higher inflation rates than their GDP growth rates. And so this is where I just want to come back to this issue that was mentioned of interest rate subsidy. Interest rate subsidy can be maintained in a positive, real economic growth environment, but once you're in a high inflationary environment, those kill your budget. So the government ends up being very scared to provide any support to housing because they have this fear that they're going to be locked in to a very high budgetary number because they've guaranteed a rate instead of a nominal amount. And so I would suggest that one of the things that's been successful has been the types of subsidies that you're already doing through PMAYG directly to homeowners. And you have the mechanisms in place, and it all seems to be working wonderfully, except for engaging the financial sector into that system. And also on the data side, you're getting great data. Data is one thing that is the lifeblood of all of this housing finance system. And so the more of it that can be provided, and I mean, I really commend you for the work that you're already doing and for the amount of information that's available. But if you can integrate the financial information into that system, then, and I mean loans, then you'll be in a much better position to be able to advocate with other government departments for increased funding for housing. That has worked. With the data, you get more funding.
That's true. So we have created some data for microfinance segment. We do have, but it is not that exhaustive. We are trying to build up some data from our segment. We understand that a lot of institutions, they are doing this housing finance, but not really in a big way. But we, as you were telling that we, I mean, we need to work with governments, we need to build up the data. Everything is fine. So now, have you seen in any country that credit guarantee?
Can I just say one thing about that?
Yeah.
So when you talk about data and you talk about financial institutions, the only data that they will provide is the data that's required of them, and that's the regulator's role. So it's fine for the sector to say we want to be gathering data. Honestly, that has not worked very well. The self-regulatory mechanisms only are as powerful as the regulator requires them to be. And so if you want to collect more data, you need the regulator to insist that the financial institutions provide that data. That's kind of what we
totally agree with you. But what has happened in India, like I'm talking about the experience of Sa-Dhan, over the period of last 15 years, we have developed the data and which has helped us to do the policy advocacy. That this is what is the requirement of the industry, these are the things we need to do together. Then we put it on the plate of regulators, then they responded. They also wanted some more data, we have provided. You're very right, there is a push from that side. Will be better, I mean, Sa-Dhan's role or the association's role or the SRO's role will be a little bit easier. Agree with you. In any country, have you seen any credit guarantee mechanism for this housing loan?
Yes. So the credit guarantees that we tend to see come in two forms. One is insurance. And so this tends to be more connected to the mortgage sector. So a lot of times what you find is that if the government wants to provide more lending to lower income populations that wouldn't necessarily qualify for a traditional mortgage loan, the government provides an insurance on that loan. So this is usually done through a government insurance agency, specifically for mortgage insurance. There are private sector alternatives, but we don't really find those too much in emerging market countries. So one of the things that the governments do is can provide insurance, and that way more funding. So for example, the NHB funding that's maybe isn't flowing right now to the lower income populations. If there was a guarantee on the loan, it could replace some of the more stringent criteria that the NHB has that's not allowing it to lend to the populations that the microfinance institution, for example, serve. So insurance can be a powerful guarantee. The other...
Portfolio insurance you're talking about?
No, this is actually individual loan, insurance for individual loans, which is paid for by the customer.
Okay.
Yeah, but again, this is a structural solution because the government has to set up the insurance company. So, but it can be very powerful. The other ways the guarantees come in is on the supply side. So sometimes government can put into place credit enhancements, for example, which already exist in India. You have priority sector lending, for example, and other types of credit enhancements can work to ensure that the investors are able to invest into the sector. Because right now there's a lack of private capital flowing into this.
My next
sector.
question was that one only, that how are you seeing this investor communities responding to the requirement of housing? Are you seeing many investors are coming in this domain, or like there is a kind of not so interesting for them, this housing segment?
No, I think it is interesting, and I think it's more and more interesting. So because the private capital is chasing returns that can't be provided in this space, what we tend to see are more blended finance mechanisms coming in, and those tend to be led by the development finance institutions like the World Bank or the bilaterals. And those, has been a lot of interest. And so we are, and what they do is they draw in the private investors. So you might have an investment by one of the World Bank entities, the International Finance Company, of say 35%, and then the private sector brings in the other 65%. And so in that way you're drawing in the private sector, but it's led by this kind of blended finance vehicle that's usually channeled through the financial sector, financial institutions like everybody else.
Right. The last I would ask for you, so we could understand the policy barriers, we could understand your this investment side, we could understand the credit guarantee mechanism, what's your suggestion is. Now I want to understand that how are you seeing the preparedness of the industry to access the investment and also your borrowings from these lenders and investors? How prepared are we?
See, again, to me, this comes back to the role of government, because the financial institutions are very responsive to regulatory requests, right? I mean, so if you require a financial institution, and again, you have this experience in India, you've done this, you've actually moved the entire sector into a more formal posture. And so I think if you can continue to work with the regulators, you can continue to sit down with the government and understand how the microfinance sector in particular can be a part of the ecosystem. I think you'll be very successful. And you can be very successful at attracting capital as well. But it has to be, I mean, this is a big challenge. It has to be blended capital. You're never going to get pure private capital in unless you're charging, rates that are really unaffordable for lower income people. So to me, that's the whole key here: is sit down together, look at an ecosystem approach, bring in the part of the financial sector that's already working with these populations, which is the microfinance institutions, as well as some of the other formal institutions. I mean, we just heard from the NHB about the large percentage of the portfolio of some of the NBFCs that are, I think they're NBFCs, housing finance companies, that are already serving the lower income populations. They probably need to go down market, and the microfinance institutions probably need to come up market. That's the challenge that we always have. But the way that the regulators structure the sector will have a critical role in ensuring that all people can be served. Yeah.
The last question from my end is, are you trying to bring green equation in the housing? If you are bringing that one, your cost of this construction of the house and other things will increase. How are you thinking to bring that green quotient into this?
Yeah, so that one is actually easier, although it seems more difficult. It's easier because every country has already set up their own national, they're called nationally defined contributions. So it's basically saying how much they're going to cut their emissions. I honestly don't know what India's are. I probably should have looked that up before I came. Somebody probably knows. Does everybody know what the Indian NDCs are? No. So anyway, but India, like every country in the world, has set a standard for itself for cutting greenhouse gas emissions. The government is responsible for ensuring that you meet those targets. The construction industry provides something like 40% of all greenhouse gas emissions in the country. So if you want to comply with your own NDC limits, you have to tackle construction. Now a lot of people say, okay, well let's tackle that by, looking at commercial construction, commercial real estate. That's fine, except that residential real estate is, in India, I think it's close to 90% of all construction is actually residential, which is the same in most countries. It's 70 to 95% across the globe. So the only way to reach your green targets as a country is to look at residential construction. And so there are mechanisms, global mechanisms, that help countries to reach those targets. There are several big international funds that are really complicated and difficult to access, but governments can access them, and they can flow that reduced cost of funding down through the system so that financial institutions can access better funding, but they have to then have the standards and to ensure that what they're building is green. And this is the challenge that I know that a lot of people are working on, including Habitat, which I think you'll hear about in a bit. But you have to have the standards for the actual construction that's happening. So this means that for a person who's building a house, they have to be able to comply with the standard in order to ensure that they can access the money at the lowest cost. And it flows all the way up to these large international funds.
Right. Thank you very much, and we could understand that working together with government is really essential, especially for the housing. And we are fortunate to get government side also in this room, and we'll take this discussion forward. I have exact 2 minutes in my hand. So if somebody wants to ask something to Patrick, will be great if you have any question. Otherwise, he will be here during our this period also, research period also. We can talk to him. But if you want to ask him something, yeah, please. Sangeeta, can you please?
So, hi, my name is Ranjit Mishra, and I'm the CEO of Satya Micro Housing, who truly works in the micro housing segment all across the country. I have just one question which I want to take a lead from the global practices, if at all it is available there. So India is vastly populated in the rural hinterland, and most of the municipalities finish within the 300 cities of the country. But in order to fund those houses which is built on a rural area or maybe peripheries of urban area or semi-urban areas, is there any template where through self-certification, housing maps and some kind of things is available in the worldwide, if you have any global experience? Because what we have observed in these rural areas, people are making houses, they are getting all the benefits or all the facilities like electricity, roads, everything is there, government is providing everything. But when it comes to the funding, we lack that paper, and then that creates issue for us.
Entitlement paper.
Yeah. No, the entitlement is there, sanction map and all. So is there any global template, suppose 100 yards, a square feet, self-certification, you don't need, if you have a road and you have electricity access, you can make it, you don't need go for a government approval from municipality, or panchayat don't have that capability. So if there is any, that will be helpful for us to grow our portfolio in this.
Yeah, so there's kind of two different models. One is where you want those. Sorry, just turn that one off. Yeah. The one is where you want those properties to be individually titled, right? And so there you need to work with the title whatever government agency is doing the titling, and to make sure that you can title them. But where you have, traditional or customary land that is not going to be individually titled, then there are models. For example, in the Philippines, they have a model where a community can essentially issue a mortgage on the land. See, the problem is a lot of times you don't want individuals to own the land, because if you have a communal piece of property, you want that to be retained as communal. So, but what you can do is you can make the entire property mortgageable. So for that, you need some kind of an organization, like a nonprofit organization or something, that can hold the mortgage. So once they hold the mortgage, then the banks can lend, because there's already that underlying mortgage for all of the properties. And so you can then divide it up, basically, like you're saying. But it's not self-certification. I don't think self-certification really works. You need to have an organization that can hold a mortgage in that model.
So, thank you, Patrick. I have exhausted my time and my colleague is looking at me.
Thank you.
Thank you for the deliberation. Thank you for coming here and participating. And it's wonderful to hear him always. Thank you very much. This is the handicap made by people. Can this come? Yeah. No, thanks. If you want it, no. Come, person. Come. Thank you very much.
India Humanity Organizer Center to introduce themselves and their work.
That's what we need to get Sa-Dhan to raise that as an issue.
Welcome to the dais, please. Mr. Prasanna.
Good morning again, everyone.
Is it working?
Yeah. Good morning again. Welcoming you all again on behalf of Habitat for Humanity. I am Prasanna with the Tribal Legal Center. In the interest of time, I know we are a little behind schedule. We will do a short presentation to introduce our work, and then we will get to the proceedings of the day and deliberate on some of the challenges that have already been put forward. So, Habitat for Humanity is a global non-profit organization founded in 1976, and we are operating in more than 70 countries. Broadly, we work on 3 areas of work. One is doing direct construction of homes for people in need of homes. This is something we are doing in more than 70 countries by raising philanthropic capital and then building homes for people who are really in need of homes and cannot access market-based solutions. The second is market-based interventions. If you see the demand for housing globally, it is more than 3 billion people in need of adequate housing. So that kind of demand cannot be addressed purely through philanthropic means. So there is a need to intervene through market-based solutions to address this demand, and we do this through multiple verticals. I'll speak about it in a couple of minutes. And the third is policy and advocacy, which Patrick already spoke about. Again, being in the housing sector as a specialized organization that is focused on housing and understanding the housing ecosystem and adopting a systems approach to solve housing challenges globally, policy and regulatory aspects and creating societal level impact is a piece of work that we pursue as part of this third vertical. So Habitat established this Terwilliger Center in 2016 and to focus on market-based interventions. And since inception, we have impacted more than 30 million people through our market-based interventions, whether it is through access to finance or access to building materials, access to design and architectural services which help low-income families, especially those who are building individual homes. We call it self-construction or beneficiary-led construction. These are different terms meaning the same thing. Essentially, families who have a piece of land and then building homes incrementally. We've helped improve their homes to adequate conditions for 30 million people in the last 7-8 years. And again, we've worked with over 100 financial institutions across the world and helped mobilize over $7.9 billion in terms of capital that is being infused into housing. As Terwilliger Center, our approach is one of being a facilitator in the market. We look at the broader systems and then see where there is a need to intervene and how we can work with market actors, be it private sector or public stakeholders or civil society, to identify, test, pilot those solutions and help scale those solutions. So striving for scale is one of our core philosophy in terms of putting out, testing any solutions and then taking those learnings and scale those models. So today, even this initiative by engaging with Sa-Dhan and bringing variety of stakeholders is a way for us to identify some of the sector challenges, share some of the learnings we have done through our pilots and push for scale by working with stakeholders like NHP and Ministry of Rural Development to get access to finance available. Second is, whenever we work with a private sector firm or any institution, the idea is, whatever ideas that we are testing and promoting should be self-sustaining. So is the idea, can the idea self-sustain on its own? Can it scale? So these are again parameters that determine our areas of intervention. So with that philosophy in mind, we look at 3 verticals of work. One is housing finance, second is housing quality, and third is innovation and entrepreneurship. I'll be speaking about housing quality and innovation right now. My colleague Nupur will be speaking about housing finance a few minutes later. Within housing quality, again, as you might have heard from Gaya Prasad ji as well, when we look at these individual houses, most of these houses are built with the help of a local mason. So again, the segment of people do not engage with an engineer or an architect to design or build the house. They see it as an additional cost. And masons in general learn on the job. While skills may vary from state to state, we generally see that in the southern states, some of the masons build good houses. But we cannot generalize and say that all masons build good houses. So there are quality gaps which also affect affordability, which affects lead time of construction, which also has implications for durability of construction. So with that in mind, we look at building materials such as M-sand. So when river sand was banned in Tamil Nadu, people were very reluctant to adopt M-sand, which is an equally good product available at 1/4 the price of river sand. But people were illegally getting river sand 4 times more price and end up with an incomplete construction. So we work with M-sand manufacturers, Bureau of Indian Standards and the local government to see how we can create awareness. How do we improve adoption of M-sand in the state, which has changed significantly in the last 5 years. So when we started in 2018, there were 30 manufacturers selling M-sand. Today there are 400 manufacturers. So it's no longer an access problem in the state. What we are addressing right now is how do we improve offtake of quality M-sand. So we are now working with Bureau of Indian Standards to certify M-sand manufacturers who can ensure that people have access to quality sand. Earlier we were looking at how do we improve awareness of sand so people start adopting it. Now the situation has changed. So this is how one piece of work, one sector has changed through some of our interventions. The second piece of work that we are doing is, what are those, again, cement, steel, all those core products are accessible at the hinterland. Any pin code you take, good products are available. But then we look at what products can make a difference. We have seen a number of houses, even concrete houses built 2 years, 3 years before, have dampness and water leakage. Why is it happening? We realize that there is lack of awareness to solutions such as waterproofing, which can, at a very incremental cost, as little as 5,000 to 10,000 rupees for a 500 square feet house, can significantly improve the durability of the house. Based on this, we did a demand survey and then went back to waterproofing manufacturers to show that there is a huge demand at the bottom of the pyramid which is not being serviced. Primarily being lack of awareness, second is access to those products. So we work with these manufacturers to deliver those products and services to low income segment and create a win-win solution. The businesses get new customer segment and increase their business, and customers get access to quality products through which they can improve the quality of house. So waterproofing is one solution. Similarly, we are working on heat reflective coating. Very small cost addition, but it can significantly improve thermal comfort for families living inside homes. This is becoming a big problem which is being discussed in many forums. Today heat is a big problem and people are finding it difficult to stay inside the homes between 11 to even evening 3. What used to be a 2-month, 3-month problem in some of the states is becoming a 9-month problem because summer is there. In most parts of the country it is like 9 months, 10 months kind of summer we are seeing. It's no longer like 3 months. So we are seeing adoption of those kind of solutions and we are working with various stakeholders. Again, IGBC is in the room. We've been working with various institutions to also see how do we improve adoption of those solutions in the market. And sustainability is another piece. We spoke about green already. We are also working with a lot of startups to promote green products, green and also affordable products. Not green for the sake of it, but how do we get families to adopt fly ash bricks instead of red bricks, which can come at 2-3 rupees cheaper than a red brick. So green for green's sake, families will not adopt. We'll also have to see how do we make it affordable, at the same time create that behavior change in that segment that it is an equally good product. If you use it, you build a durable home and you also save costs. So these are some of the strategies we use. We work with a number of firms to do this. And lastly, we have worked with a number of startups. While some of these solutions I spoke about can immediately solve problems for people building homes, we are also looking at technology and innovations that can change how housing is done, how housing affordability can be improved over the next 5-10 years. Some solutions we have tested. One is 3D printing of construction. We worked with a startup called Twasta, which built the first 3D printed home in the country in IIT Madras. Similarly, we have worked with a financial fintech company called Navank, which is changing how property valuation is done, which is going to have implications in terms of how do we finance, how do we underwrite low-income segment if they have an existing property and sell them a LAP product, a loan against property kind of products. So these are some solutions that are coming out from the startup ecosystem that we are facilitating, mentoring and accelerating through our startup vertical. Coming to housing gap, I a little while ago said that the need for housing or access to adequate housing is humongous. We need all ecosystem actors, be it public sector, private sector, civil society, to come together to address this demand. Over 3 billion people are in need of adequate housing. It's not that they are homeless, but the homes that they are living in is not adequate. The quality of homes can significantly improve. And we discussed a little while ago about how financial inclusion has changed people's life over many years, again through microfinance institutions. Similarly, housing plays a role which can have multidimensional impact across the socioeconomic indicators, be it health, be it living standards, be it school education and whatnot. So housing plays a significant role, and addressing housing demand through market-based interventions is a crucial call for action from our side. And India's perspective, as of 2022, close to 100 million units were needed. And I'll just speak the India piece first. So estimated shortage was around 100 million units, and we have seen through PMAY 1, already roughly about 40% of this demand is met. PMAY 2 has been launched recently with a target of 30 million units, which presents a huge opportunity today to see how do we drive access to finance to these families so that they are able to build their house better and faster. If you see the demand for housing finance, with the shortage that we see currently, the value of total housing in the country that is needed is at 150 trillion rupees, and of which the aggregate loan demand itself is 58 trillion rupees. And earlier, Vishal Goyalji also spoke about how our mortgage to GDP is at 11%. Just to compare with country like South Africa and China, mortgage to GDP is over 20%. So there is a lot of latent demand and potential for us to intervene here and provide access to finance so that people are able to build and complete their homes better. I'll invite my colleague Nupur to speak to some of our housing finance interventions.
huge need for housing finance, and housing finance product services can play enormous role here. So as housing finance team, what Villager Center does is, we are trying to bring more capital into this space so that more institutions can have product services to serve the low income. And along with that, we realize that it is not just the money which will help, it is also the technical assistance. Basically, फील्ड लेवल में कैपेसिटी की भी ज़रूरत है ना? अगर हाउसिंग करना है या MFIs को हाउसिंग करना है तो कैपेसिटी इज रिक्वायर्ड. सो वी नीड दैट काइंड ऑफ support also. That support is actually provided by, like in our projects we provide that support. Not just bringing in capital, also providing. So micro build has been our flagship initiative. It was established as a demonstrative fund in 2012, and it has invested in around 66 institutions across 33 countries, and we are in the wind down stage right now, but this micro build has helped in establishing housing as a profitable asset class, and that is through our research, through our investment we have seen. It was a $100 million fund, but when we are winding down, we see that it led to an infusion of 800 million. So when we see that 8 times the capital was infused in this sector, especially dedicated to affordable housing finance and all types of housing finance, whether it is microfinance, whether it is micro mortgages, whether it is energy efficiency products related to housing. So all types of solutions and products were tested through this. Because it was a demonstration fund, what we saw that there were other institutions which need to be brought into the segment and the sector. So we talked about our fund with Asian Development Bank, and currently when I'm speaking, we have a live project with Asian Development Bank where ADB provides the credit guarantee support to microfinance institutions. Initially this project was meant to be in 5 countries, but right now we have partnerships in India and Nepal. And the beauty of this is that the Villager Center provides the technical assistance to the financial institutions. Once the product is ready, we help them pilot test it, and ADB provides credit guarantee. वो support जाता है local banks को ताकि वो ऑनलाइन कर सके microfinance institutions को. So that comfort is being provided by ADB. So not just the macro level conventional housing, we are also working on testing different models. So one of our works is definitely pilot testing. तो हमने इंडिया की अगर एग्जाम्पल पे बात करूँ तो we have worked with different types of institutions, financial intermediaries, whether it is MFIs, HFCs, small finance banks, and we have also piloted as well as scaled in some cases some of the products related to gap funding, क्योंकि PMAY में भी हमने देखा कि फाइनेंस की ज़रूरत होगी, just the subsidy amount will not help. So there is a need for additional fund to flow in, which is called gap financing. So we have done those pilots. We are currently also working on a green housing finance solution, because as Patrick in the earlier session, he talked that built environment is responsible for more than 40% of the greenhouse gas emissions. So if a sector is responsible for emissions, that sector is also responsible for controlling it. तो वो control हम ही कर सकते हैं. So housing sector, we have IGBC, India Green Building Council colleagues in our room also. So why IGBC? Again, I'm stressing on this because we are talking about affordable segment, right? We are talking about low income segment. उनको green के बारे में समझाना, उनको sustainability के बारे में समझाना is very difficult. So IGBC came out with indicators which appropriately suit this market. So we are talking about Nest and Nest Plus. This certification works well for this affordable segment. तो अगर हम इस टाइप के products, basically housing finance plus certification, then it becomes a green affordable housing finance product for HFCs and MFIs. So we are also pilot testing a few solutions here around. At the same time, we are working in the fintech space also. क्योंकि rural की तो बात हो गई, semi-urban की बात हो गई, पर urban housing में भी low ticket size की ज़रूरत है. So how do we use the digital history, data history, and use it for providing credit? So we are working with a fintech called Karma Life, and we are piloting a product which is basically providing small ticket size loans to gig workers. और एक बार हम इसका reception देखते हैं take Deepening, we will definitely scale it up to micro mortgages as well. And ये सब तो products की बात हो गई. So what are the services? So just having a housing finance product does not suffice. That is what we have seen in the field level, in the client segment. They need to be educated. They need to be made aware of how to use that finance appropriately. हम financial literacy की बात सबको ही करते हैं. Savings, what kind of credit products you should be aware of, government schemes, etc., etc. But how do you use the adequate amount of finance to build your home adequately? And here is where we talk about construction practices. Again, this is very important that some of our partners, I can say this because it's a closed room, so some of our partners do not buy into this concept, which is fine because we understand the business priorities. But जो intentful MFIs है, intentful partners हैं, जिनको पता है कि अगर इस type के products भी होते हैं, like consumer education, it's just related to construction priorities. Basically, अगर आपके पास पैसे हैं, तो आप सबसे पहले क्या करोगे? क्या आप furnishing पे काम करोगे, paints पे काम करोगे, या फिर अपने घर के washroom या kitchen को पहले बनाओगे? So that decision, how do you help that client make that decision, which is critical. And these are very high-level education materials, which again we are pilot testing with some of our partners. With that, we say that all of this, one or other types of solutions happening, but we see that there is a need to bring all of this to scale. We talk to partners, we talk to them about our work. At the same time, we work in a collaborative manner ताकि affordable housing का जो issue है, जो challenge है, that we cannot mitigate completely, but yes, we can, at some extent, we can work towards it. So we are working with Sa-Dhan, and as my colleague said, that this is one of the forums where we are trying to not just talk about or deliberate or discuss and debate about potential challenges, problems, solutions, but also what next steps can we do, what tangible solutions can come up from the conclaves which we had. This is our second conclave in a row, and we have been focusing on the segment of 1 to 2 lakh, 10 lakh ka ticket size, because if we see the NHB data as well as if we see the Sa-Dhan data, in the microfinance segment, the data says that less than 3% of your non-income generating loan, of the total portfolio of microfinance institution has been invested into housing, which is less than 3%. Similarly, the NHB data says that in the HFCs also, we see that ticket size up to 10 lakhs, if you can see it is hardly, it would be less than 7% if we take everything together. So basically there is a gap, we all are aware because we are from the sector, but what needs to be done? This segment is not easy to serve, it is informal, they don't have credit histories, they don't have adequate documents. So this segment is very critical, but how can we solve it? We had some solutions in Conclave 1, and we expect more solutions, more insights, more challenges so that we can work together towards this. So with that, I would request Sangeeta ji to carry on. Thank you.
Thank you, Nupur. Thank you, Prasanna. So now continuing that discussion and their initiatives and what they are looking for, more solutions. We will now have the group discussion, which will be in alignment with our challenges and what we are looking for. So I hand over this session to Dr. Saibal Paul to take this ahead.
So the format of this one, this is workshop. This is not mere your just deliberations. People will come and people will go. Here we need to understand. This is the second event we are doing on this. We have done something, the same kind of event in South India. It is the time when we are doing in the north. So what I will do, there are 4 segments we could figure out. That first one is your business case, second one is your policy, third one your capital availability, and fourth one, which is very important, which I was also asking Patrick, that how prepared are we to access the finance and everything, institutional capacity. So there are 4 areas where we will be dividing ourselves, and have a discussion, and then there will be a presentation. People from this Habitat for Humanity are also there. They will also be part of discussion. We will also be part of discussion. And then in how much time we have given for it? Like at least half an hour, 45 minutes, we have to discuss on these different issues. And then we will have a presentation. And then after that, we will have a presentation what we learned from the South Indian event. That whether it is aligned or there is something new we are coming up with. So if we can divide ourselves, this first table will be for the business case. This one will be for the business case. Second one will be your policy and regulatory consideration. And third table will be for your capital availability, and this is the fourth one. We will be discussing on the institutional capacity building needs. So feel free to divide yourself into this one, and we will request government representatives to be in all the groups, because this is one of the alignment we are looking forward for. They need to be buying the whole system. So this table, please feel free. This is for your business case. This, not only this one, we can also use this one to table more. So this is for the business case. Second one is for your policy and regulatory. Whoever wants to. Third one is your this capital availability, finance and everything. That's where. And the fourth one is the capacity building. Capacity building, yes. So please disperse yourself according to your interest.
When I say equal, I mean my spend, if an account turns into NPA on a 3 lakh, is as equal as an account in NPA, which is the cost of legality
in the ticket size of 1 lakh to 10 lakhs. Again, this 1 lakh to 10 lakh is not one product, it can be multiple products. So it can be 1 lakh to 3 lakh, 3 lakh to 5 lakh, 5 lakh to 10 lakh. But the idea is this particular piece of financing is largely unserved and underserved in the market. For the second is capacity. Again, we are talking different types of institutions here. Microfinance institutions, small finance banks, HFCs, each have their own capacities and strengths. Third is policy. There are policy regulatory aspects which constrain ideas from all of you. And the fourth is capacity. For example, HFCs may have a strong capacity in terms of doing underwriting, title verification, which MFIs may not have. So if we are looking at partnership models, how do we build capacity? So this is just one prompt, but there will be other capacity issues also. So yeah, feel free to call.
Housing finance is a fairly new particular concept. And housing, because we also
as far as the monetary policy goes, not just government doing something, it's every stakeholder bring in their changes in their way of
Myself Sandeep Kumar, I'm working in Future Journal.
Hi, can I have your attention please everybody? Yeah, my name is Piyush. I am from IFL Home Finance. I'm here with my group where we were discussing about the opportunities per se for this segment and as to why an MFI or a housing finance company could really look at this segment as an opportunity. I mean challenges, I'm sure there's a group who will cover the challenges as well. So I think the first pointer that we think is the sheer size of scale. Now I'm sure you will all agree to this point because we've seen it in Habitat's presentation as well, where Prasanna was talking about how large the market is, and government per se is the only area or space where I feel that this kind of scale that we were talking about can be achieved. I mean, I can cite a few examples with certain state governments that we are already working with. I think I was also talking to Patrick earlier while having a coffee that state like Andhra today is building close to 25 lakh houses in the PLC component per se, right? And they are, yeah, only in urban, PMAY urban. However, if we don't look at the PMAY scheme, they have their internal, their own housing, state-sponsored housing schemes as well, which they have converged into this scheme and are now making a total of about 35 lakh houses across Andhra. Right? And this is happening only in one state in India. Now just imagine, Andhra was, under PMAY urban, Andhra was the state which was given or sanctioned maximum number of houses per se. Right? Just one state giving almost 35 lakh houses, what would this mean for the rest of India? States like UP, which is a massive state like Gujarat, which is another bigger state like Maharashtra, right? And that's why we feel that because of the sheer size of scale, this product per se makes more economic sense for MFIs or housing finance companies to enter into this segment, right? Coming to the next point, we feel higher yields is what would motivate housing finance companies or microfinance institutions to enter into this segment. By higher yields, I mean there is, I'm sure we all understand, there is, because we don't accept deposits from the public, there is COB, which we also call our cost of borrowing, right? And there is cost of lending. Now, when I look at it, if you look at the informal segment, now we're not discussing the salaried class customers here because that's a very different segment and bankers are already catering to that segment. So there's no challenge in terms of a salaried class customer to get a housing loan from any particular banker today. However, for the informal segment, the only options are local money lender, or to sell off any of their asset class, which is either a previous, an acre of land or whatever they have in their possession, or gold per se, through which they can raise funds. If I look at my COB versus call, this is just an assumption, this is not a direct representation of what my organization is doing, but however, just for representing and putting down something here, if I assume my COB is about 6%, right? To a salaried class customer, I could extend the loan, let's say between 10 to 12%. Right? Because the existing bank rate would be hovering at about 8.85 to about 10.5%. Right? However, for an informal sector, I could start as high as, let's assume, 13% and go say up to 18%. Right? So my yield per case or per customer or per beneficiary is way higher for a smaller ticket size loan. Right? So here I get barely about 6%, here I get close to 13%, which is almost double. And that's why we feel as a group together that it makes more economic sense for us to get into the informal segment, typically your 1 lakh to 10 lakh category of loans, because A, the yield is also higher. We also need to understand that because we were categorically looking at the segment of NBFCs only. So there is a cost of borrowing and it keeps increasing if I'm not utilizing or expending away with the money, right? So that will increase to my cost of borrowing. And that's why we feel it makes more economic sense to get into this business model. The third is gap funding. I believe this sector has not really, we haven't been able to explore the entire gamut of how much would it mean to complete this house and make it habitable. By completion of a house, I mean the definitions could differ in terms of government functionary. When they mean a house is grounded, they could mean that it is completed and it would show up on Google app, etc. However, when you go down to the field, this could mean very different things. The house could be complete, but yet not habitable, right? And in order to make that house habitable, I mean, we all believe as a group together that there is an ample amount of gap funding that is required. And this was noticed specifically in our organization's endeavors as well, when we were looking at multiple states that we could enter into categorically for funding the gap in BLC segment per se, right? I mean, if anybody has any questions, I could probably dig deeper or dwell deeper into it and explain as to why we are saying the gap funding aspect is quite high. Yeah, so for a 30 square meter house, I mean the lowest I've seen any state government contribution for PMAY urban only, not Gramin, was close to 30,000 rupees. And we've seen it as high as 1.5 to 2 lakhs across state governments like Tamil Nadu, which was, funding almost an equal contribution or a little bit more than what was offered by the central ministry. Now, in spite of that, to make the house habitable, there is an ample opportunity of nearly 1.5 to 2 lakhs, which could be offered as a gap funding. However, we also feel that this amount cannot be, brought together and given as lump sum to the beneficiary, because then again it might lead to misuse or whatsoever, right? And we felt that if we could, along with the subsidy that is being rolled out from the government or ministry, we could also supplement by giving this gap funding amount in tranches rather than giving out as a lump sum payment to the beneficiary. The reason being, we also saw that across state governments, although the subsidies were being rolled out, we also saw that there was a considerable amount of delay in these subsidies being passed on to the ultimate beneficiary, right? However, if the beneficiary has access to funds at that particular stage in plenty and it is quite accessible, then there is every possibility that the cost of constructing a house would come down from about 1 year to hardly about 6 months as well, if at the right stage he or she is supplemented with additional income or additional funding to complete the construction of the house. And that's why we feel gap funding is still an area which is unexplored. And last and not the least, equitable participation from the private sector as well. Why we are saying this is today when a lot of schemes are being rolled out from the government's side, a major contributing or driving factor that they are also banking upon is primarily the SLBC, which constitutes of all the banks, right? However, NBFCs are still not a part of this particular SLBC forum, right? And I think this has been one long battle that all the housing finance companies have been having with NHB even today, that you also consider us as part of the same family, right? Or include us in the SLBC forum, because most of the discussions around any particular subsidy being rolled out, any new scheme from the ministry being coming in, happens to get discussed at the SLBC forum level. So our only suggestion was that if it could have some sort of an equitable participation from this NBFC sector as well, then it could lead to way bigger goals being achieved than it is happening currently. So I think these are the 4 things that we thought why it makes business sense for NBFCs, microfinance companies or housing finance companies to, get into this sector of 1 lakh to 10 lakh category of housing loans.
Great, you are on
Thank you.
time. Any question to this group? Any question, please? No? Then we can move on to the second group. Policy, regulatory considerations, challenges. Second group, please.
Good afternoon, everyone. So we as a policy group, we have deliberated on this subject. We have housing finance companies, insurance companies on the table with the senior government representatives and the consultants who is working on the mortgage industry. So as a practitioner of the field, what we have understood so far is why we are not able to extend some of the loans to the individuals who is looking for loan. Still in mortgage industry, rejection rate is bare minimum 50%. It can go up to 60% in this segment also. So the main issue, as an affordable housing finance company has traveled a long path. It has started its journey in 2008 somewhere, and now we are in 2025. Good number of companies has matured during this period, and they have mastered 2-3 things which is critical for housing loan. One of them being underwriting capabilities of the individual, which is mostly barefoot entrepreneurs all across the country who don't have any papers to show their income, but they have business, they earn every day and they support their livelihoods, and the India having informal economy and informal MSME and individuals contributing largely towards upliftment of the society, and big way they are contributing in the GDP. During this last 15 years, I can say, or 17 years, housing finance company, especially operating in the affordable segment, I am not talking about the biggies who have achieved milestone 10,000 and above. The bottoms, 70 companies have achieved mastery in underwriting those income segments, and over the years of last, not completely 2 decades, if you see the loan loss ratio in this segment is not less than, not more than 1.5%. So that is the testament of doing underwriting, which is as good as equivalent to the formal lending institution biggies like as well as DFC and Bajaj of the world, and obviously IFL. So one thing has been sorted, which is very critical for repayment of the loan, because we as a lender don't give loan for property possession and sell in case there is a default. We give loan for the purpose where the customer will be able to repay our loan and stay in their house peacefully. So that's the prime criteria that has been ticked by housing finance companies. The biggest challenge where we are facing is having the kind of collaterals. So anything loan beyond 10 lakhs and above, you have a formal collateral, some sort of arrangement is there and people are finding ways to finance them. Below that, in top 20 metro cities, you will hardly find any collateral which can be available for loans up to 3 lakhs, 5 lakhs, 10 lakhs. But in semi-urban, so we look at the collateral where the land titles are there. It is demarketable and identifiable, right? These are the 3 top criteria. At the same time, those collateral must be in the residential areas, and those areas should be notified as a residential zone, not agricultural zone, in top cities at least. In rural areas, you don't have that kind of notifications. Or you have hardly 200 plus municipalities all over the countries. Okay, so even in some of the district headquarters, having that kind of struggle. So there, the problem is with the land titles. and the problem is the demarcations. And even if lands are in the name of the owners, those are not by way of physical documents. So I have a land in my great grandfather's name, which is under Khasra Khatoni, some bigas and all, but nobody is going to accept that. I can't give any physical paper to them. So that is the biggest challenge. So that's where, if at all one has to look at what is the solution. Solution is for PM Swami to use now. But this is applicable for those who is having land titles. What about those who is not having any land titles? But still they are in the possession of land and they are living there from ages. So there we can have, 2-3 things as an organization. We haven't heard about the unsecured loan. I have debated many times with the NHB folks. They are not here. So home loan can be defined by the purpose. It is not by the collaterals. Otherwise, all the mortgage loan can be home loan because home we are giving there, right? So one of the solution can be a unsecured home loan, which can be restricted up to certain amount based on the risk appetite. That can solve this unavailability of title, because as an organization have mastered the ability to underwrite the repayment capacity of the individual. There you are home, right? But how you are going to price that kind of product? The microfinance institution is not able to penetrate that market because they have the ALM issues. They are borrowing for 2 years. They cannot lend more than 2 years. Here this kind of loan is always more than 2 years, 5 years, 10 years, because per lakh people want to pay only 1,000, 2,000 rupees per month. So if somebody is buying, taking home loans unsecured even for 5 lakhs, their EMI will be somewhere 8,000-9,000 rupees. But microfinance cannot give because, and if at all 5 lakh rupees for 2 years, their EMI will be huge, 20,000, 25,000. So that is impractical for us. So the suggestion or maybe recommendation of the group is, as PSL was used for agri-financing, microfinancing, some portion can be diverted towards the micro-housing, which can be having collateral or may not have a perfect collateral. Earlier used to be a scheme for refinance backed by the World Bank, run by the NHB, which was called informal home loan, informal income, informal title. The same has to be reinforced again. That is very critical for promotion of this.
I think this is the biggest bottleneck what you have cracked. This is the nail to the coffin.
Yeah.
That is the problem.
So this is the requirement. Once this will happen, so through PSL route, bank will get into the financing mode as the microfinance are getting.
Yes.
There can be little longer period of loan, maybe not 10 years, maybe 5 years, 4 years, 3 years, and maybe little larger ticket, 3 lakh, 3.5 lakh, 4 lakh, 5 lakh rupees.
Absolutely.
And since the bond requirement, if you don't fulfill the PSL, you have to buy 3% bond, bank will subscribe this product and they will go for this.
A lot of public sector banks are sitting on the PSL money, they are not able to disburse.
Yeah.
So regulatory intervention is a must.
So one recommendation is adoption by the regulator and the policy maker, affordable home loan unsecured, where there is a need of similar provisioning norms, similar, there is no LTV requirement because provisioning and CRR calculation is directly linked with the asset class, which is in different bucket of the LTV norms. That is the biggest thing which has to be accepted by the regulators while they are publishing their annual guidance for the housing finance or maybe NBFC. So that will help. And we are saying unsecured home loan, then PSL, which will help. Then what we are saying, government is coming, India has floated a debt securitization company for doing securitization of mortgage loan, which is just in the stage of beginning. They might do first transition before 31st March. And that is backed by the NHB and the LIC and the few banks and HFCs. Their credit enhancement can be provided for this kind of pool, 3 to 5%, which will allow matching tenure resources at a lower rate and some kind of enhancement, as Patrick has mentioned, social fund, via that credit enhancement can be done. So that's another recommendation we want to make as a group. Obviously, for this kind of loan, credit guarantee cannot be a solution at a large, because India is a democracy, and once you give a credit guarantee at a government level for a larger scheme, everybody will default because you have to go for a voting every 5 years. The solution is give some kind of tail-ended subsidy. If you take a loan up to 5 lakh or 3 lakhs, 20% will be paid by the government once you completed your 80% journey without any default and any issue. So that will drive the good credit behavior and serve the purpose as well. Or this sinking fund can be used by, I don't know, we will be also impacted. The Swachh Bharat kind of fund cess, which was introduced and taken by all of us, and some of the city has been clean only. But anyway, we are saying that. Anyway, so you don't want to. So that kind of some mechanism to get a sinking fund, like if you create a debenture, you have to create sinking fund for repayment. That kind of thing, some sort of, maybe from CSR, some CSR money should flow into this. I don't know. That I am leaving to the wisdom of the government, regulator and policy maker. Obviously, interdepartmental cooperation, the biggest problem is that title we have talked about. The map approval, which is the critical component of accessing funding from the banks by the HFC or NBFC. So if you don't have a map approval, those properties are treated informal. So what we can do, India is a country which is living in 70% in rural areas as of now, and those areas do not have any municipal corporation, and Panchayat has no authority to issue sanction map. So nobody is there to say that this house is okay. So some kind of self-certification, or maybe some kind of NGO-led certification, or some kind of pre-modeled house with the parameters. If you check all these things, your house is okay. First, that will be treated as a sanctioned home, right? So that will help to make all those mortgageable properties funded by even SBI. And forget about that. So I am getting a good amount of salary. I am having 800 plus CIBIL score, bureau score. But as an individual in India, I cannot get mortgage from the State Bank of India in my village, where my ancestor is living from 400 years. I have a good house, which is just road is passing through, and electricity is given by government 30 years back, and everything is there. But I cannot get that loan from one of the largest lender of my country, because that land has no title. That land ownership is in the government's register only in my family name, and I don't have any authority which can say this house is okay. All parameters. It is earthquake resistance, built by all these having, kitchen, toilet, everything is there. But I can't get loan. That's the plight, and that's the problem. I'm just telling you.
You have 2 minutes more, sir.
So we have enough time, 120 seconds. MFI is the problem with the MFI is ALM mismatch. So if you pull the PSL route and move that pool through securitization route, so MFI can build and sell those pools and securitize. The securitization money will take care of the mismatch, because that is door-to-door funding, which will come through the securitization route. So if the loan is for 7 years, funding will come for 7 years. If loan is for 3 years, securitization route will take care of ALM mismatch. So these are the suggestions. If you have any question, happy to answer. And yeah, please.
I am having a suggestion on just that particular point where most of the financial institutions are struggling.
Please use the mic, it is getting recorded.
Yeah, introduce yourself also.
My name is Pramod Gupta. I have experience of 10 years in MFIs, NBFCs and banks. So prior to this, I worked for affordable housing segment especially. So Sir, you rightly pointed out that sanction plans and building plans is one of the biggest challenge and problem to fund the rural areas, especially because there is no structured way of getting it. So I will take 1 minute. 5-10 years back, especially in rural areas, even in the urban areas, people were not having आधार ये आय प्रमाण पत्र हम जो बोलते थे, जन्म प्रमाण पत्र, निवास प्रमाण पत्र, because every time you have to have that kind of certification, you have to go to the block and keep coming and going 3 or 4 times. Nowadays it has been rationalized, structured way. Now you can go to any कुछ CSP point पे जा सकते हो, किसी भी किसी दुकान पे जा सकते हो, वहाँ से आप उसको register कर सकते हो. So my suggestion to this particular point is, especially for the government agencies, एक ऐसा कुछ integrated platform बने, where that platform is accessible to all the lending institutions. What that platform will offer is all the loans which are being sanctioned to those special areas where building map or building plan is not available. You just go and upload the data of that particular household who is seeking the loan, and then there is authority who has a TAT of, let's say, 12 hours or 24 hours to click approved or reject that particular entry. That will streamline the entire sanctioning authority plan, and that will remove the risk of collateral damage in future, and that will help lending institutions have confidence that okay, this particular house is mortgageable and there is no risk from the government that tomorrow or day after tomorrow that will be demolished.
So great point, great point. So obviously that will be part, yeah.
I'll just answer that. Hello, I'm from Ministry of Rural Development, looking after Pradhan Mantri Awas Yojana Gramin. As you said that you need some database. We already have a website which is Awas Soft. You can see all the people who have been sanctioned the house till the from the GP to the beneficiary wise data. So if you just want to see the details like if they are there or not, we have a beneficiary ID. For every state, for every person there is a beneficiary ID. You can actually just put that ID and see at which stage of construction their house is at. If you just need a database that who are being sanctioned, and the sanctioning order is by a government official.
Okay,
in
so
the
that is for the people who have already availed that subsidy benefit, right?
Yeah.
But I am talking about apart from that, those people who already have a house in the rural area, they do not have any sanction plan. That I mean, their house is not approved by government agencies. They have constructed by their own. उसमें bathroom कहीं और है, सीढ़ी कहीं और है, कल demolition risk is there. So I am saying, ऐसे कुछ structured way बने, जिसमें what lending institutions may play a primary role. They will simply go and upload that particular entry. Let's say मेरा नाम प्रमोद गुप्ता है and I am coming to some financial institution to take housing loan. तो मेरा जो डेटा है घर का भी और मेरा पर्सनल डेटा वहाँ पे वो चला जाए, उसमें वो डेटा आपके पंचायत अथॉरिटी या ब्लॉक अथॉरिटी के पास जाए, where he will see the location of my house. उसको पता है कि एक पर्टिकुलर गांव, let's say सेमरा में इसका घर है, तो दिस गांव इज नॉट अनअप्रूव्ड, इसको हम अप्रूव कर सकते हैं, इसमें कोई रिस्क नहीं है. फ्यूचर में देयर विल बी नो एक्शन फ्रॉम द अथॉरिटी ऑन दैट पर्टिकुलर विलेज. तो जैसे ही अप्रूव होगा ना, फाइनेंशियल इंस्टीट्यूशंस विल हैव अ कॉन्फिडेंस दैट दिस house is secured and there is no demolition risk or something like
yes,
that.
Yes, I can assure for the at least Gramin area, like the sanction data is there. If you want that entire
no, so there are two different sanctions, madam. Yeah. That is a subsidy sanction. He is talking about. Suppose you want to want to construct a house in Delhi, you need a permission from the municipal corporation with the map.
That is separate.
So that's the sanction. Yeah. So last point I just want to conclude because I don't want to stress. I was given only 2 minutes.
I have one question.
Yeah, let me finish this and then we'll take questions. So digital mortgage.
Sorry, ma'am, and we were discussing about the beneficiary information being available on the Pradhan Mantri Awas Soft portal. I mean, we've dealt with that portal. However, it is available only
if I feed in the registration number of the beneficiary.
You can select it. You can select the state, district, block, GP, and then you get the beneficiary.
Is it downloadable?
Yeah, it is. It's on the public domain. So that data is there.
Because we are working with a couple of state governments So how I do credit assessment primarily
That
is
what you're
by
talking
checking
about,
the registration
yeah,
number.
registration number you can separately then feed in the beneficiary detail, then you get the pictures and how many installment wise that detail. But if you want the GP, how many beneficiaries have been given, they've been sanctioned.
Not how many. So if I look at it from a business perspective, ma'am, I would want to know who that beneficiary is.
They want name and number.
You can get the name of the, what do you want? Yeah.
No, so I would want the detail or contact details of that particular beneficiary, right? And I can't do that today on your portal unless I feed in the registration number, which I can only get if I'm able to convince the state authorities.
No, the registration number, no, yeah, you can't get the personal details for sure.
That's exactly what is required for me to reach the customer, ma'am. Today the problem is the customer, आप already बोल रहे हैं कि वो ग्रामीण में है, right? तो अगर वो ग्रामीण में है, उसको अगर loan requirement है, how do I reach him or her unless I have the contact details?
But at least if I don't know, like what is the outreach of reaching to the GP?
Ma'am, so you could, I mean, just
no,
a part of the idea.
One thing, when you are talking about this one, if you get the geography, like a village or something, and if you are getting the name, your people are there on the ground, they can figure it out, right?
It's so costly, na?
But people are already
Manpower, sir, today I think while we are having this discussion, most of the organizations want to expand, but not at the cost of increasing their manpower. Because out of experience, sharing this purely out of experience, increasing the manpower does not mean bringing in more business.
No, that's true.
It does not happen that way. And we want to be more agile in terms of using software, and if there is access to data, which thankfully is in PMAY Grameen. However, accessibility of that data is not to an extent where I can, filter a state, find out how many beneficiaries are there in that state, कौन से district में कौन beneficiary, उसका नाम क्या है और उसका mobile number क्या है.
So in the interest of time,
consent from the beneficiary before.
We'll discuss this offline. I have one last point. So India is having large amount of land record, logged in the Khasra Khatoni, which is just a digital register or some sort of register. So the digital mortgage, if can be created through the Sarsai site for these folks, that will save huge cost for the entity for doing business and deterrent for the default, because the likes when we go for our vehicle loan, our mortgage hypothecation with the RTO, so anyway you cannot sell. Whenever you are default, it has to go through the lender. The same way, digital mortgage, especially I want for every loans, but if at all taking time, through Sarsai, Khasra Khatoni can be, used for digital mortgage. That is the wish list, and it will unlock huge amount of, so currently India is having 35 lakhs mortgage loan outstanding.
You have a speaking slot also.
Yeah,
you
so
can tell everything you cannot tell.
So it will become 10 times, yeah? Thank you.
Just
Thank you.
one thing on that, sorry. And it will go on to our topic as well of capital availability.
You can continue from there.
You can start now.
So I'll make that one point, and he will.
Just make the switch and then you can.
So I work for a US-based fund.
There is a question or what?
No, so there is a question to it.
Okay.
So I work for a US-based fund called SEMA Funds. I don't know if
I'm
because you were lenders to Satya. We are in the fund that we are trying to build now. We are trying to actually address all of these points by giving long-term capital. And also trying to see if people will be okay to take this unsecured product, right? Irrespective of whether PSL happens or all that happens and all of that, we are trying to do that. So the question to you and probably to the first set is also that what is the rate that you think you can charge? And the reason why I'm asking that is that we are facing a different kind of problem. The problem that we are facing is if it's a long-term lending and we are raising capital from the US, from Europe, so it's USD, Euro-linked capital, the hedge becomes a problem, right? The hedging cost for a long-term facility a 5-year, 7-year, 10-year, we are trying to do up to 10-year financing, is exorbitant. So even if I am able to raise a blended finance structure where we get like 10% for grant money, which gives us the room to build the entire fund, take the risk and all of that, the weighted average cost in dollar terms would come to say anywhere between 7.5 to 9, depending on what happens in the US, and we don't know what is going to happen there in the US right now. The hedge over that would be another 5.5, 6%, right, which makes it unviable for a 10-year product. So one part on the capital availability that we had also pointed out is that the government can come in here and just manage the hedging cost. And we don't want actually to get in a lot of capital from outside India. We actually don't want subsidized funding. There is enough and more capital willing to come into India, but nobody wants to take a currency risk. Right? So the question to you and to the first team was that what is the incremental rate commercially which can help you guys and also help some of the hedge cost? And the request to the government and through NHB, through RBI, whichever structure is possible, was to actually look at what portion of the hedging cost they can take, so that the overall cost of capital to the entire MFI and NBFC industry can reduce, and a lot of capital will be willing to come into India from outside. So yeah, so part question and part point of
two, three things. So if the loan product will be 2-3 years, that can be basis the hedge which is currently running, that can be adopted. But if the loan product and tenure is 3 to 5 years, 10 years, in that case, as I said earlier, there are 3-4 routes which can take care of the hedge cost. There might be some kind of social funding fund which can be created in order to the way market stabilizing fund works. So you will have some kind of support from there in the case of adverse currency movement. Gift city can be explored, how if at all it works. There is no other way one can. And CSR, a lot of fundings are available for impact, and NGO kind of stuff. I don't know, grant, all these mix can help to reduce that.
No,
but overall,
that is not required.
Yeah.
If we get help from either RBI or NHB or the government in some structure to just take the part of the INR risk. So with a small amount of just a guarantee, probably not even funded requirements, just a guarantee, there is a potential to unlock a lot of capital.
One thing I would like to highlight, this kind of situation only catered and the product will be extended by the smaller companies. I'm telling you, I'm not hoping HDFC Bank will float this kind of product, because they have their own growth potential, the plan and the selection customer. They don't want to grow in this segment. So it will be done by all the small and medium sized companies. Their cost of fund is always 10 to 12%, 11%. I am a housing finance company, I am raising 11 plus, which is ridiculous. That I can say, right? And then on top of that hedge and all, it will, again, you have to think through some kind of structured product.
11% you are raising from outside? No.
Yes, for housing. Yes, sir.
No, from
Yes.
outside.
For housing.
Right.
From outside.
Is it from outside?
NHB के अलावा
Yes, banks.
Banks.
हाँ.
That means within the country only.
Yes, within the country.
So no hedging in there.
No. I'm just saying the normal. Foreign fund, how much you can get. Yeah. So it is very difficult in that. Refinancing has separate criteria, boss. It takes another ages for organization to take, and it's not much available, and that will be not available for my use unsecured housing loan. All the secured. Thank you. Offline बात करते हैं. They have, they are solved. Thank you.
Thank you very much, everyone. My name is Pramod Gupta, and I'm joining my friend to present our perspective on capital availability for micro housing and affordable housing segment. So before I will start the problem and solutions that we have listed down, I would like to take on where Sir has left, that even to continue and to grow in micro housing and affordable housing segment, we as an industry and as a country need to have support from MFIs. Without their support, we cannot penetrate in that particular area. If we talk about this social impact especially, because micro housing and affordable housing generally being taken by the people who doesn't have a house already, right? So kind of impact also. So why I'm saying that MFIs play a vital role in making this particular product reachable to everyone, every individuals in rural area, because they have already a huge presence there. उनके पास वो already they have so many branches, they have already present there. So MFIs play a very critical role in expanding this micro housing and affordable housing product to rural areas because of their availability. First, now comes how MFIs will help in this micro housing and affordable housing, because the term affordable housing itself has so many problems. In my perspective, the affordable housing should not be called affordable housing. It is not affordable at all. Because of the cost of borrowing, because of the cost of lending. We are saying that affordable housing, boss affordable housing है कहाँ, 20-22% के customers को दे रहे हैं, तो affordable housing है ही नहीं है. That should be called higher yield housing. That is not affordable housing. How can we say that मैं आप खाना खिला रहा हूँ, but we are not giving food to that particular person? वो affordable तो है ही नहीं. That is not affordable at all. So let's call it a higher yield housing product and micro housing product. So now coming to the problems that we have listed down. First one is the capital adequacy, rightly pointed out by Sir also. I think most of our points were already covered by them. Because of the policy and capital availability always goes hand in hand. So capital adequacy, you want to add on this particular point?
No, yeah, I think availability of long-term capital, point number 1 and 2 were, I think, also the ALM part was covered in the earlier thing. So that was what we were saying, and the exchange rate point also was linked to that, because capital can come into India, but within India you will need it to be under PSL, and the other solution is co-lending with promoter take-up. And for money to come from outside India of longer tenure, you need to manage the exchange rate risk and hedging. So those two were the challenges that we're talking about. The third point is interesting. Maybe Pramod, if you can take that.
So yes, so third point that we have listed down is NHB support for rural housing to MFIs. So MFIs is exclusively mentioned there. Why? Because what Sir has pointed out, and we also thought of, and everyone sitting out here must have an opinion on this also, that the cost of borrowing is very high for MFIs. The moment MFIs approach to any bank or any funding institutions, they look at them as like यहाँ से तो पैसा बनाना है boss, है ना? अगर कोई MFI किसी बैंक के पास जाए, कोई NBFC which is providing MFI loans, microfinance loans, the moment they approach to any bank or funding institutions, वहाँ पे they will suddenly raise their lending costs from 8%, 9% to 15%, 16%. Their negotiation starts from there. भाई 18% पे भी मैंने देखा है लोगों को funding raise करते हुए, and that is very much that is the true. सर ने तो 11-12% कहा, मैं तो 18% कह रहा हूँ. That is 15-18 से बात नीचे बनती ही नहीं है. अब think about it.
मैं हाउसिंग फाइनेंस की बात कर रहा हूँ.
Start होता है exactly. So think about it. As a salaried employee, I am getting personal loan of 10 lakh rupees at a rate of 10.99. And at the same moment, of MFI, which is providing loan to rural people, is getting funding at 18%. See how this dynamics is working. We are sitting in an industry which is completely contradicting to each other.
And that's so long-term capital nahi milegi.
Exactly, and that is for 2 years and 1 year or 3 years only. So, see here the government people are also sitting, SROs are also sitting. This is the forum where this kind of problem should be discussed and not only discuss, this should be addressed. Discussion तो होता रहता है, बहुत सारी चीजें होती हैं, गवर्नमेंट में भी बहुत सारी discussions होते हैं, and that keep on lingering on. Discuss and that should be addressed. So we should not discuss, we should address. तो मैं यहाँ पे ये बोल रहा हूँ कि NHB के पास एक ऑप्शन है, let's say कि let's create a corpus of let's say 20,000 crore. मैं बहुत छोटा सा example ले रहा हूँ, and that particular corpus will go directly to MFI's companies. So the instructions could be such that NHB says that we are promoting rural housing. ठीक है? Now all MFIs has open doors. They can go lend to the customer, come back to us, and like some for say finance, say microfinance, if we have lended up 100 crore in 1 year, so that 100 crore can be compensated by NHB at lower interest rate. Let's say market में अगर हम 18% ले रहे हैं तो वहाँ से 12% में मिल जाए.
That's what we are also. I mean, our experience with NSFDC is also like that. It's SC. I mean, scheduled caste customer, they got it at 15% because we got the fund at 5%. And I totally agree with you. And government people are here. They should do something for this segment to support the poor people. I mean, it's a request to the people.
In fact, I was talking to Mr. Prasad ji morning. So he was telling that we can work out something.
Right.
So he has promised that we will come back and work out something for no price.
Right.
So thank you very much, sir. So that should not be restricted to SC, ST. I'm saying.
No, that's our experience.
Okay. Yes. So यहाँ पे अगर NHB ने ये काम कर दिया ना, तो MFIs will do wonders. And MFIs will do wonders. And see, इसका बहुत सारे अलग positive impacts भी हैं. I'm saying that the moment people get this kind of fund at lower rate, मैं कहता हूँ कि अगर आप lower में 10.9 पे personal होता है, why I'm not defaulting? Because of the cost is very low. The moment you lend some customer at a higher rate of interest, that you are pushing that particular person to default in future. Trust me, this is the fact.
Can we roll it?
Yes.
Because there is another group.
Okay, yes, sure. So this is the third point. Fourth point that we have mentioned is subsidized lending rate. Yes, that same is covered already. Reduction is hedging that my friend has already mentioned and discussed in the continuation of previous group. The solutions that we have put it across towards all these problems is co-lending. Co-lending today is happening mostly in unsecured funding. So microfinance and higher yield of housing can also be put together in a co-lending model, and that is a very good product to explore, because MFIs and the lending institutions both will have win-win situation for this particular product, and obviously the benefits are immense for both players. Availability of and access of impact fund that we have already discussed. Some structure to fund PMAY homes, yes. Why we have mentioned exclusively over here is that now, because of the government initiatives, people in the rural areas are already having a house now. Though it is small, but they are having a house. So some sort of policy can be formulated, and the ownership should be transferred to those people, and they can go further to the lending institutions and get maybe home loan or LAP or something on a very low rate compared to the normal unsecured funding. Contribution from government for hedging that we have already discussed. So yes, the discussions were towards capital availability, but we somehow drifted because of the opportunity that we got. So thank you very much for listening to us peacefully and attending. Thank you very much. Yeah.
Thank you very much. There is a problem, logistic problem. So 2:30 onwards, there is another lunch needs to be set up. Can we do one thing? Can we have our lunch, come back quickly, and then we will have a presentation of the fourth one?
2:30.
Yeah, 2:30 they have another one. If we can disperse and have lunch. Sorry, because it was wonderful discussion.
Group number 4, ready with the presentation?
So very good afternoon to all of you. So I'm representing this group, capacity building group from 4th group. I think a lot of issues has already been discussed, because in capacity building, I think the various components, why the business we should go on, then we have a policy issues where we have discussed all facets, and then finance group has already discussed a lot of issues. But yes, I think from capacity building perspective, we will be very short, brief and objective, because I think most of the discussions are again going to happen in another roundtable discussion here. So our group, in fact, we have deliberated, and whatever sense we got in today is that whatever policy changes or what are the expectation of today's discussion is that how MFI are going to capitalize this kind of I think the environment which affordable housing space I think the players wanted to have. So being an MFI, I think there are 3-4 things which we guys have identified. First thing is that as an institution, our capability is more to deliver unsecured loans to a low ticket size unsecured loan, and we have some lot of regulatory challenges wherein our qualifying assets criteria doesn't allow us to give a big higher ticket size loan because of FOI norms, qualifying assets criteria and all. So for us as an institution, it will be very difficult for us to lend to such kind of ticket size loan from 1 lakh to 10 lakh. So I think we need to collaborate, and we need to come up with a different innovative business model wherein if some amount of collaboration with the HFCs or I think NHB can be done, wherein on their balance sheet size we can pass on lead management and they can lend to the and we can become a lead supplier to them, and then we can lend accordingly. So I think that is one area we have thought of to focus, and for that there should be a sensitization among MFI practitioners, all institutions who wanted to come into this space through SRO Sa-Dhan. We can have some collaborative sensitization workshop wherein most of the participating institutions can come forward and sensitization can be done, and all institutions can be brought at one place, and we can give them clarity about how this product is going to help and diversify their asset class. So I think that area, I think sensitization of financial institutions is important. Second thing, we thought of that our client who are less than 3 lakh annual household income clients. So their primarily their need is business loan, and whatever loan we are providing to them, it is for their working capital loans. So as per FOI norms in this client segment group, we do not see that there is an area wherein we can lend. So we have to target the upper areas wherein a lot of customers who reach to us and we do not give them loan just because their annual income is high. So 3 to 5 lakh of annual group segment we can target. And for that, I think a separate sensitization workshop at client level is also need to be done. So in capacity building exercise, several client awareness programs of this microfinance institution clients can be done, so that we can build capacity of clients. Third thing is that there is a lot of technological gap we have identified, because as an institution we are more prone and very efficient in lending unsecured loan, but we as an institution are not skilled, or we can say that we are not we are not due to give loan to a mortgage-based loan. So I think there also we think that a lot of support can be given from as a technical expertise given to us from NHB or a technical service provider. So I think this is one area where we feel that capacity need to be built. And fourth thing is that subsidized financing in these areas, because anyway our loan, I think last mile loan is approximately 3 to 24%. But in this space, if we will give loan to 23 to 24%, I think it will be unjustifiable for our clients. So I think subsidized line of credit and probably it has been covered by finance rules. This area is required. So I think these 3-4 interventions we thought of that it is important and really required to be built in terms of capacity building. The rest I think we can again discuss in the forum and we can take it forward. Thank you very much.
Do you have any questions?
So, Sangeeta,
Mic please. Please.
good afternoon. Working? Hello. Okay, anyway, my voice is loud enough. My name is Justin. I work with the Habitat India Trust here. So we initiated a very innovative or a pilot model in Orissa. Exactly the capacity building, because we are dealing with the three different type of clients. One is the end user, the beneficiary themselves, and second one is the lending partner, your private. The third one is the government is the biggest player. So who will bring all the three players together? There should be a common platform. I think that's a role, it's terribly missing. I think that point came in the beginning, the previous presentation also. Somebody need to link all the three players together. Because the government, they don't want to do anything with the private lenders. At the same time, community do not know where to get the gap funding. So we started with the PMAY in Orissa, finding out where are the gaps, why people are not coming forward. The major challenge is because of the thinly spread. Because the PMAY across the ULB, the demand generation is a very critical piece. I think unless we find a way, the lending partners, they need a volume too. At the end of the day, they need to meet their OPEX, right? But Habitat, we are able to do 1,000 plus loan, and there is a huge way. I think the PMAY 2.0 has come up with 10 million houses to be done. That's one bucket. There is another bucket is people who are beyond and outside the PMAY. And also a number of unfinished houses. I think the MFI can play a critical role in if you look at it, the unfinished houses. In Puri urban local body, the PD called me, gave me a list of 4,000 houses are unfinished for last 5 years. Can someone do, help these families to complete their houses? I think I think at the end of these final recommendations, there has to be a common one organization which can bring all the three bodies together. Capacity building, I was talking to Patrick. Many of our home partners do not know what is the cash flow management, the financial literacy, financial inclusion, where they get the lending. All this information need to be shared. I think the capacity building is very, very important. Who will bring all the three players? Then only the PMAY will be really a successful model. Thanks.
Considering it as an advice to, I think, government institutions, people,
We tried doing that actually, sir. As you know,
the people, the team that Sa-Dhan had in 2021-22 in field, which were trying to do this, the demand generation thing and the capacity building of the end customers. So due to different reason and also the Jaga Mission, under Jaga Mission there was a patta given to the customers, so the title thing was taken care of, but the banks were still not recognizing that as a document, title document. So that was the issue. There were several issues that time, but we have come a lot of distance, we have covered a lot of distances then. We hope, because trying to bring in NSB also into this fold, and they were not ready to come.
They were not ready at that time.
So now things have moved and people have started realizing that everybody, if only we talk of problems, there will be no solution. We start discussing solutions also.
The government also, they strongly advocate for P4, people, private, public partnership. It's very, very important, the P4 approach. Thanks.
Any more questions? Thank you, sir. Thank you for it. So we move on to this last session. Panel very important. Since PMY20 has been launched, now what are the challenges? So many challenges we have already discussed, which are still on. And now, is there any scope to get ahead? Or how do you see? How does the panel see about the scopes, challenges, and how to scale up? Which is yet to start up, I think. Scaling up is the next phase. So for this panel, I invite Mr. Manikandan KP, who is the moderator of this panel. And now I invite Mr. Piyush Madheta, Head Government Project South, Mr. Anup Rao, VP Investment, SIMA Funds, Mr. Amitesh Kumar, CEO and CFO, Midland Microwave. Please, sir. Ms. Devapita Roy, Fellow, Center for Social and Economic Progress, and Mr. Ranjit Kumar Mishra, CEO, Satya.
Please a bit louder.
Where is Ankur, sir? Sorry.
Thank you. Thanks for the opportunity. I think we've had enough discussions on challenges. We've had a lot of discussions on challenges, and I think we should have a session of pure optimism, especially after lunch. And be rest assured, it will be a good session because we have got practitioners who are going to share their experiences of what they've done. So this session we picked up PMAY 2.0 as a topic more for the timing of it. The government has launched PMAY 2.0, 3 crore houses, 2 crore on Grameen and 1 crore on urban over the next 5 years. So we all also understand by working in the field that this is a smaller subset of the larger issue of access to housing in lower income segment. Just that the numbers around demand and how much is required, there are several numbers floating around. So just to bring the focus back into a number which is manageable, which is still huge, and also help use this narrative to inform the government that this 3 crore target, if it needs to be achieved, we need to do these 1, 2, 3, 4, 5. And it's not like it's not happening, it's all happening at some scale. But then as we started off this morning session, this needs to happen at Bharat scale. Now Bharat scale is what really is the challenge, and that's what we are discussing about. So to kick off this discussion, I'll invite Dr. Devapita Roy. She had done an extensive research on PMAY urban and wanted to give some insights on what she found out when she actually analyzed the data, especially in the context of self-built incremental housing, which is what we are talking about, that small, low-income housing which one family builds one at a time types. Over to you, Devapita. What's going to... Yeah, so while she brings out the urban thing, the larger scheme, which is the Grameen, like close to 3 crore houses, 2.7 crores are already completed, has been happening. So it's 2016 onwards, an improvised version of Indira Awas Yojana as we saw it. The cost structures were low, when it started off 2015-16, there was a jump in the subsidy provided by the government, IAY, vis-a-vis PMAYG, and quite a lot of things that happened. But then, as we saw when COVID happened and when things started moving forward post-COVID, we also saw that there was a good amount of increase in the cost of construction and labor, and which has also resulted in an increased cost of housing overall, in self-built housing and in apartment cases as well. So what it really means is that it's increased the beneficiary share to the house to get it completed. As long as the ticket sizes were small, like 50,000, 1 lakh, some MFI loan, some MSME loan, some gold loan against gold, relatives and friends could pool in and still get the house completed in some shape and form. But then as we go forward, the next 5 years, it's still going to be significantly higher, which means we can no longer go with the jugaad. Because I was talking to someone, 2.95 crore houses has been built. If formal financing was not working, something was, and still people built. But then we cannot use the same jugaad going forward, so we need to do something structured, and that's what we are here for. That's on the Grameen side. Urban side, over to you.
Yeah, thank you. So as Mani mentioned, the urban side had actually 5 components, and of them 4 were the main components, of which BLC was the most successful, with 62% of the total sanctions under PMAY being in BLC. The next was another demand side scheme, which is CLSS, which was actually a direct home loan subsidy scheme, which was given by the centre. And then there was the Affordable Housing in Partnership, which is nothing but you construct flat complexes for primarily EWS households. By EWS households, under PMAYU definition, it means a household which is annually earning rupees 3 lakh or less. Now, where were these houses really built? Okay, if you break it down by city classes, this is how PMAY's sanction distributions look like, which is roughly, you can see most of the action happening in BLC in small cities. If you take away small cities from PMAY sanctions, more than 2/3 of the sanctions vanish. And especially, I think of the total PMAY sanctions as such, also more than 40% was BLC sanctions in small cities. So, from the demand side, right, is there a demand for small ticket home loans? There is very much a demand for small ticket home loans, especially even from the BLC perspective, because even in the entire 7.2 million BLC homes which were sanctioned, roughly about more than 1/3 of them have been delayed. About 25% of them were actually cancelled. And the two main predominant reasons for the delays, which have been cited in the official CSMC minutes of meetings by the state governments, and the reasons that they have given to the union, the Mahua, that this is the reason that we are seeking cancellation of so many. One, you don't have the adequate land documentation for the household to claim the BLC subsidy, because only you can claim a BLC subsidy against a very valid land title. And the second is problems in getting my beneficiary share in place. So if my total cost of construction is, let's say, between 4 lakhs to 6 lakhs, okay? As we discussed quite extensively in the morning, total central plus state share of subsidy will come to about, at max, 3.5 lakhs. The remainder the beneficiary has to put on the table on his or her own. Now, I did not do a beneficiary level study as a part of my study. There have been studies before. So there was a study which was done by GIZ and CPR in 2019-20, just around the COVID time, and they looked at Odisha and Tamil Nadu, and they had sampled 300 BLC beneficiaries. And of those 300 BLC beneficiaries, 80% of them have taken a loan in some form or the other to fund their beneficiary share. That remaining 1 lakh to 3 lakh or 4 lakh, whatever, that they have to put in to build their house. But of that 80%, only 1/3 could get a loan from any institutional source, including MFIs. Rest of the 2/3 were from money lenders, largely from friends and family. And as the last resort, your local sahukar, the money lender. Okay. So the question of demand, I think it's really a moot question. Let's not discuss it. It's very much there. How much is the demand? Probably there needs to be a very deep dive. Deep dive at probably your ULB level, at maybe even your ward level, and build it up gradually to the national level, so that everybody in the room can very effectively cater to that demand. Right? And across states, as Piyush had mentioned, the bulk of the share, even if you take up Andhra Pradesh from PMAYU numbers go down by 40%. And BLC in Andhra Pradesh has been major driver of the overall PMAYU assets. Next comes Uttar Pradesh. And by the way, these charts are very much there in my report, which is out there in the public domain. So I will not go too much into it. Now, this slide I really don't need to. I mean, you guys are the masters of this. But I will just stop here with this slide. I know, CLSS really might not be of interest to you. You do not operate through the CLSS route on PMFI. But what this slide tells me is, in the morning you heard, somebody from NHB say that 40% of our loans are to EWS and LIG. Even PMFI numbers on the dashboard says about 2/3 or 75% of the total loans are to EWS and LIG. They do not break it up. When you break it up between EWS and LIG, by the way, these are numbers straight from the PMFI dashboard. When I downloaded the data, I scraped the data from PMFI dashboard, and these ULB level numbers which I aggregated across India. And what I find was only 21% of CLSS beneficiaries was EWS households. And really the argument that if somebody is not getting CLSS, they are getting BLC and AHP. That doesn't hold if you look at the second graph. In a million plus city, where you would expect that people will get more home loans, there the percentage of EWS households getting a CLSS distribution of CLSS among EWS, LIG and MIG households is even worse. Right? So there's a clear, what this slide clearly shows is that yes, there is a problem of access to institutional home loans by EWS households which are earning 25,000 a month in our urban areas. I'll stop there, ma'am. Thank you.
Thank you. Thanks for that data slap on the business case of why we should be discussing on this. Right? So since you mentioned the Andhra case, I'll go to Piyush. You did touch upon it in your presentation as a team, but then let's stick to this story of optimism of one institution, one state government, one partner NGO, and one action, whatever they could achieve in the Andhra. So over to you on the PMAY Andhra story.
Sure, Manikandan sir, thank you. So the story is not very, very long-dated or very old per se. We started this product particularly to cater to the BLC component, and thankfully Devarpita has shown us the data which validated the fact that the major chunk of the opportunity was lying in the BLC component itself, right? So we looked at this segment, we deep dived into it. However, I'll again not go into the constraints and the challenges, but look at the bright side of it, that there were state governments who were already storing a lot of information onto their respective state servers, even before the requirement or need to share data for, where is this property located, so on and so forth, came in from the ministry, right? So much to say that majority of the states in southern part of India were already capturing a lot of information from the beneficiary themselves. And this could have happened at various stages. This could have happened when they were doing their internal surveys to access how many of them actually require BLC loans, etc. So again, I hats off to the state government functionaries and the ministry as well for creating such a big scheme where a lot of beneficiaries could take advantage of it. However, when you look at it, at the urban local body or the urban development authority level area, they had to really understand, conduct again several rounds of census at the state level also to understand how many of these beneficiaries actually require a house. Post which this entire information was obviously approved, and that's how we got in touch with the department. However, when initially we approached the nodal authorities, the response has been similar across a lot of states. I was sharing with my group as well when we were having a discussion that more often than not, it is presented as there is no need or requirement of additional loan. Primarily because subsidy is enough to cover a 30 square meter house, technically speaking, which is as per BLC norms, right? However, having said that, when we were discussing about the gap funding piece, when we started asking more relevant questions as to how much do you think would it cost for this house, and in your presentation also you mentioned, let's assume 4 to 6 lakhs, right? So for a 4 to 6 lakh house, agreed that the subsidy is almost equivalent to almost 3.5 to 4.5 lakh rupees, which is coming in from both central ministry and state ministry put together. This is happening across very few states where the state component is very high. I think Manikandan can vouch for the fact that Tamil Nadu being one of the states where the state component is quite high. Whereas certain other states like Andhra, the state component is as low as 30,000 rupees only, right? So in such states, what happens to this, what it leads to is, if your government functionary at the state level is competent enough to ensure that the subsidy is rolled out at exactly the relevant stage, right, for all these 25 or 35 lakh BLC beneficiaries that you have managed to identify, then yes, I agree there is no requirement of a gap funding, correct? However, that necessarily does not happen. Because there is a constraint. When we as an organization say that there is a constraint of resources across an area A or an area B, however, the same would be true for the state government functionary as well, right? So it would mean that there could be problems of, let's assume, customer A, beneficiary A, has completed, let's talk about the stages, basement level, roof level and final completion. I'm not digging deeper into below basement level and roof level and all of that. So let's assume there are 3 stages, and across these 3 stages, beneficiary A has completed the first stage of basement level. He's now expecting to move to the next level based on the subsidy which will come in. But that will come in only if his or her photographs are uploaded by the engineering assistant on ground, right? And how quickly after posting the image on, let's say, Bhuvan app, how quickly will it be approved, and how much time will it take for the subsidy to finally flow into the beneficiary. Now this could take as low as, let's say, 3 working days, this could take as high as, let's say, 3 months to 3 years. And I am purely sharing this out of experience across states that I have managed to work together with. So in this scenario, what happens is this beneficiary A is then sort of waiting or puts an end to his construction, whatever he's reached till that particular stage, and does not move to the next stage, primarily because of lack of funds, right? And this gap funding is where organizations like us, MFIs, housing finance companies come in and say that, hey, let's try to cover this gap, right? In our group presentation also, I was mentioning that we are not here to say that let's dole out credits, give a lot of funding to this category of beneficiary. We are only saying let's try to do a gap funding, which means let's also work in tandem with what the government has already thought of, and it was pretty profound. However, just to ensure that it reaps in more benefit, let's try to complete or shorten the timeline of construction of each house. Let's say from 1 year, if that was the assumption that a 30 square meter house can be completed in 1 year, let's say that if the person has access to credit at the right time, at the right stage, he or she will be able to complete his or her house within, let's say, 6 months, right? And that's what, the question of what's in it for me is again at multiple levels. It's true for the state governments, they'll be able to complete their PMAY related targets much quickly, and the beneficiary will be able to complete his or her house way earlier. And we on the other hand
So say the big number and say how you managed to do that.
So we have successfully been able to extend loans to 35,000 beneficiaries across the state of Andhra. This is a story of about 1.5 years. If you look at volume, it's close to 650 to 700 crores of volume that we've already managed to disburse.
And how did you do it? Like, what was the two things which the state of Andhra Pradesh did which helped you do this?
Sir, access to information was provided to start off with at the very first, when we sat down together and thought about what we can do for this. Access to information, which I feel is very important, if that is provided. A lot of these NBFCs or housing finance companies can take it from there and move to the next stage.
I'll translate this again in English. Name and number was made available to them.
Correct.
Of the beneficiaries. Right? Like that's the state government facilitated access of name and number of eligible beneficiaries to the lending institution. That's one key thing which made it work. Because the third question which they wanted answer for is call the customer and find out do you want a home loan or not. That would reduce the funnel from whatever crores and lakhs to whatever number which becomes manageable. And that's what they were able to crack. What was the other one which they did?
Sir, like I said, they were already storing a lot of information at their own server level, which helped me to do a credit assessment, sitting in my office without even having to worry about going into the field and finding out whether this house is there at this location or not. So I think
again, I'll translate. Like the geotagged image of the house was made via API to them.
Yeah.
So using proper processes and documentation. So what it basically did was allow the lending institution sitting in front of the computer, see the security and sanction the loan. So I'm saying why I call this session is the session of optimism is we don't have to search for imaginary solutions. We have solutions which have happened in our country at scale. We just need to take it Bharat scale. Right? Thank you. Thanks, Piyush. I'll come to Ankur Singhal-ji. Please. You have been going around, especially in the northern states, trying to figure out the whole business, this segment. What has been your experience around PMAY in general, in terms of the clients, and what have you seen in the field?
Thank you. So, my company is in distribution of financial services. So, we basically want to empower aspiring Bharat through financial inclusion by leveraging technology. So, affordable housing, micro lab, these are also the products we do in partnership with banks and housing finance companies. So in our experience, when we work in Bharat 3 kind of. So institutions, they already have their branches at the district level and they are catering 20-30 kilometer radius customers. But we are saying we are going at tehsil level, at village level. So the credit policy, they say, okay, we are giving loans from 5 lakh to 50 lakh. So that is their credit policy and we start working on that. But when we target customers who need loans of less than 10 lakh rupees and the proportion who gets sanctioned out of that is only 5, 7, 10% because though policy says it caters to 5 lakh to 50 lakh loan, but most of the conditions are suitable for loans having 20 lakh, 30 lakh, 40 lakh requirement. It's actually just mentioning like that. So in our experience, so the field executives who are working tirelessly, so they get demotivated. They are sourcing 10 files, 9 getting rejected. So they don't want to work. They say, okay, I will move to some other company where the approval rate is higher. So that is one key challenge. The institution, if they really want to do, then they have to have some differentiated credit policy for those targeted customers. The other challenge we face is even for these kind of products, the banks and HFCs, they ask for FLDG, first loss default guarantee, for up to 5%. And we can't understand, why we have to put a 5% FD of the disbursed amount with them when they are doing the final credit and it is a secured loan. Are they not confident enough of their credit process, or what kind of risk they look at when the repayment is happening through NASH? So these are the two challenges we see where we struggle to scale as well. Because from the first our OPEX increases, retention of employee becomes difficult, and from the second point it becomes capital wise it makes no sense for us then to scale. Thank you.
Thanks. Actually, it did not come out clearly also in the session this morning. Cost to customer is mostly in this driven by cost of funds and OPEX, operating expenses. And so if you look at it from a lender's point of view, a 20 lakh loan and 10 loans of 2 lakhs is going to give the same gross margin, but the effort done to do 10 loans of 2 lakhs is significantly higher. Now that is what actually ends up increasing the cost at one stage. And of course, cost of funds we discussed enough. So these are clearly challenges which we need to have. Like if we have to give the quantity of financing, formal financing, and quality of formal financing, if it has to reach to this segment, like we need to keep working on both. And to reduce the cost of OPEX, we can discuss other models which we'll probably do in the next round. I'll come to Amitesh ji. Like you have a strong, vibrant microfinance community which you are servicing currently. What has been your experience and outlook, especially coming from this whole point which we have been discussing from the morning, that house for the individual and the family is not a consumption loan. Like it's an extension of the family's financial inclusion journey and process.
Thank you, sir. I represent Middle Microfinance. I think let me tell more about my institution first. Middle Microfinance, we are a 10-year-old institution based out at Punjab and now spread into close to 14 states. We are having close to 11 lakh of customers. We have lended around close to 36 lakhs of customers till date, and we have seen all these a decade kind of experience in terms of institution also, and I have been into microfinance practice since 15-16 years. So I have seen the journey of financial inclusion right from I think 2006 to 2007 onwards till date, and seen the journey wherein loan were being sanctioned through pen pencil, and now an entire process is digitized, right? So when the RBI regulation, which is currently being regulated for MFIs, before that there was no cap on qualifying assets criteria, and we had a lot of cushion wherein we were planning to diversify in this kind of field, because we were realizing that when we were reaching to customers with a lot of pain, the customers after 3-4 years is looking for a differentiated kind of products. So initially we came up with education loan because it was small ticket size loan, and as an institution we felt that no, this is area wherein first of all we should foray into it. And then whenever we were meeting with the customers, interactions, and on our call centers also, we realized that the customers, they are saying, we have a lot of trust in you as a microfinance, because you keep coming to us on a weekly, fortnightly or monthly basis, and our trust level is immensely high. So if you come up with a housing finance loan or some kind of a housing improvement loan, our trust level is high, and then we will definitely pursue it. Otherwise we have to go to different institution to avail this product. So as an institution also, I think we were seeing a lot of demand, and as we all know that we have talked in presentation, all speakers and everyone, we have realized that the demand is immense. But as from regulatory point of view, in present context, RBI doesn't allow us to do a lot of innovation in terms of doing some secured or mortgage-based loan or any kind of other loan. That's why today I'm here also to understand more how innovatively we can do it, whether we can tie up with HFCs, whether there can be some dedicated line of fund from NHB, or books can be underwritten on other books and we can become a lead supplier. So that process probably is, that's why you guys are here to understand more.
Thank you. Ranjit ji, like you've taken, he wants to do, you've taken the plunge. You are a large MFI, you still are, and you have now gone the HFC route yourself, right? Like, so tell about the journey of transition, the motivation, and how you have been doing in the past few years.
So Satya Micro Capital is a microfinance company which is across the country. We are having 700 or plus branches. In 2021, as a natural extension of product offering for our 1.5 million customer at that point in time, we thought, during the COVID, everybody was looking for shelters and home. We thought, why not for our customers? So we have explored to venture into the housing finance company, and then we chose, micro housing as we say. We have access of customers and we have experience of all across the, territory of the country. So we have zeroed in and we bought, we have done acquisition of a housing finance company. we got RBI blessings, and since then, from 1 crore journey to reach now 250 crores AUM in shortest span of time in the housing finance history. Fairly, catering to the low income, profile customer, where, so we call them barefoot entrepreneurs, who is wearing the hats of entrepreneurship, but they are barefoot, they are their own, they don't have any backings of, papers, regarding their income, regarding their collateral. So we are operating into that segment, and the journey of affordable housing finance India has seen in 1.5 decades evolves immensely, and in terms of flow of funds, in terms of equity, in terms of debt, understanding of regulator, understanding of the market intermediaries like banks and capital market, everybody has matured, and the customers also. Underwriting is one of the aspects which has been cracked so far pretty well. In terms of property underwriting, that is also has been cracked to some extent in informal segment. But still large work has to be done, as we were talking about during our discussion as a group on policy intervention. So once the collateral piece in terms of digital mortgage on the Khasra Khatoni ownership can be created, this will release vast amount of collateral in the mortgage data pool, and that will help a lot of access to this kind of customer. Another one is, most of these vulnerable segment don't have title, but they are having homes, they want extension, they want improvement. There the unsecured home loan can be chipped in, and as you were saying, efforts in doing one home loan of 20 lakhs and efforts of doing 10 home loan of 2 lakhs is hugely different. There comes in the policy intervention via PSL route. Once the mandate of utilization of funds will go towards building a loan pool of 2 lakh rupees or 3 lakh or 4 lakh rupees, then it will get created. It will have some kind of backlinking that has to be done. Obviously, social funding, subsidies, all these are enablers which will create some kind of help. So that is fine. But I think we have traveled a long path, but still we are at, when I started my mortgage professional journey in 2009, India's mortgage book was 6.5 lakh crore, and mortgage to GDP ratio was only 6% at that point in time. Now we have 11%, 35 lakh crores. From here on, at least in next 15 years, it can reach easily 1 trillion rupees mortgage loan portfolio in India, especially home loan, and affordable home loan will be large chunk of that. Obviously, luxury and 1 crore plus home loan is anyway done by the banks and the large housing finance company, but the small players like us, like microfinance company, if they will have a right kind of impetus, a right kind of regulatory framework for getting into this, treating these loans not par with the loans of 1 crore or 2 crore in terms of LTV norms, in terms of provisioning norms, in terms of, all these inputs will create an environment when the players like small housing finance company, out of 91, I can tell you 70 is operating in affordable housing. So it's a good number. We have huge 200 plus microfinance institutions having huge database, huge customer touch. It can create wonders. Bank anyway, they cannot do. They have too much on their plates. They have a number of products. This is one of them. They can always leave. And it's taking too much time. Mind you, while doing unsecured loan, it's a KYC and underwriting. Here, it takes a lot of pain. It's not one day journey, but we have created that also for our customer. We have given mortgage loan or home loan in 48 hours. Truly built digital journey end to end. Thank you.
Thank you. In fact, on the security thing, some states, especially for PMAY beneficiaries, reduced stamp duty on gift to spouse, which was treated as a mechanism or an instrument to create that title document which can then become a security. But then that has its own pros and cons, but still it's one of the methods of doing it. I'll probably come to Saima, like you, Anup ji, like you've decided to take a plunge in a wholesale, so you would have done your homework. Just give us some glimpse of what did you find which made you take the plunge into this space. You can also say briefly like what you intend to do.
Yeah. So yeah, as a background of Siva, so our CEO Asad used to run the impact book for Deutsche Bank. In fact, he was one of the first lenders into microfinance in India, probably 30 years back. And at that time, the way he explains to us, he used to have to explain to people what microfinance is. As in, what is this product? Why are people doing this product? And now we are at a stage where the room is full of people who are practicing this, right? So his philosophy is that the next logical step for microfinance institutions is to get into affordable housing. It is secured, so it's much better in terms of the credit quality, and B, also because they have the systems in place now to understand their customer properly, and it's like the next step where they just need to understand the area. It's easier said than done, but that's the philosophy. Now, as a fund, when we thought about this, that we'll do this, so obviously there was some analysis done across countries. We keep on mentioning the 11%, 12% number. To just put that in perspective, it's typically compared with, say, South Africa or Thailand or Malaysia, which have higher numbers. But their per capita income is also a lot higher, and the population is a lot lower. So when we put that filter in mind, at a per capita income of around $2,000, that probably will be we are thereabouts. We are probably 3x, 4x better than the next country that we can look at. So credit where due, it's a humongous effort that we have already done. So congratulations to the team here, to MORD, to NHB to get us to this stage. Having said that, obviously a lot to do. It's only 11-12%, right? So you have like a lot to do. The typical European country or probably the US would be somewhere between 40 to 60% of mortgage to GDP ratio. So that's a huge curve that we need to go. So the idea then was to build a fund in developing economies which will help us get the mortgage to GDP ratio higher. Fundamentally that means you have to solve the pain points, right? And as we said, ALM is a pain point. So that's something that we are trying to solve by offering long-term financing. Hedging, I said that's the challenge there, but yeah, everything will have a challenge. Title is an issue. With title, when we did our research, there are entities in India, outside India that actually take more title risks, they charge higher rates. And when we asked these entities if you are actually seeing a difference in portfolio quality, the answer was no, it's similar. So that means that with or without the title, the credit quality of your loan doesn't change. Just because a person doesn't have title doesn't mean he'll not repay your loan back. And when that happens, what we are saying is that for that, say 2.5, 3, even if you double it, say 5% people who will default, we are not giving money to 95% of the people, which is a huge gap. And in a country like India, 95% of that population without title will be a huge number, probably much larger than some of the population of many countries. So that's the gap that we are trying to do. It's a risky thing, so convincing our investors is also difficult, right? Nobody will come and give money, ki jaake aap de do. So the way we are looking at it is, it's part mathematics. You have to charge more for that loan, and that pool in general will be able to generate more income to cover for the loss. That's theory. In practice, people who have done it have said it works. So we want to try that at a larger scale. So that's another product that we are trying to do in the fund. And the third one is MFIs. As I said, that's the philosophy that we want to push. That also means that the MFIs will need help in building that product, building the capacity. So there's a technical assistance package also which we are trying to build. Now, okay, having said that, as a disclaimer, DFC is one of the entities, so now it's up to Mr. Trump to help us on that, but yeah, that's anyone's guess. But yeah, this is the philosophy, and when we did our research, there is gap everywhere. So India is also, it's a $300 million fund. You can't build a $300 million fund by ignoring India. So that's where it is.
Thanks. Yeah.
One thing I would like to add here. $1 in a mortgage and housing is $6 in economy. So all the government organization has to take cognizance of that. When we touch a home, it touches 105 industry all across the country. The huge impetus goes towards the vulnerable segment, which is the customer of microfinance. So that is very crucial for the development of housing, which will lead, ultimate financial inclusion, flowing money to the vulnerable segment. Huge, impact by housing that everyone should take a cognizance, especially policymaker and regulator. That will help.
Thanks, Anupji. Actually, we want to use what points you said to actually validate two things. One, the business case for this business is done. Like someone raising $300 million to invest into this segment in India, in itself is proof that this business makes sense, right? Like that's one first. Second, in terms of this whole thing about this same thing of security and things like that, in the room we use this terminology called housing loan secured, housing loan unsecured. Like these two people are talking, the HFCs are talking housing loan secured. This person in between is probably doing housing loan unsecured. The use of the money is done. The key thing, as you rightly pointed out, this other validation is, like, the performance of either portfolios is comparable. Like, it's not like one is superior, the other is inferior. The simplest reason of why the security is taken is probably to prevent the customer / borrower / beneficiary from leveraging the same property elsewhere. Otherwise, like, the security is as good as safe, the repayment happens pretty much at the same rates, and that's what we have achieved so far. So thanks for those insights. I'll go back to Dr. Roy and ask about solutions, maybe, like what has been her initial top of the mind before we get into the practitioner's way of looking at things.
Yeah, I will slightly, kind of market research here. In the morning, it was said, and you also said 11% of our GDP is what our total mortgage outstanding is, right? Yeah, mortgage to GDP, yeah, ratio. In US, it is roughly around 80 to 83%. In Netherlands, it would be 105%, something like that, right? Okay. If I look at the US research on housing, on an average, probably in a given month, in very high index, very high quality papers, at least 2 to 3 papers would be coming out on housing loans itself. How many papers have come out on the low income housing tax credit scheme of US? Probably a few hundreds, if not thousands. Okay? PMAY has been running for 9 years. So far, there have been just about 7 papers, out of which I think two would be, ones which people would take seriously. Okay? And that itself speaks to the importance with which housing finance is taken seriously in our public policy discourse. Okay? Because research is nothing but directed by your public, it's a direct outcome of your policy discourse which is taking place in the country. You see so many papers on, our inflation, what is happening to our inflation, how to, bring it down, what is going to the MPC going to be doing, and blah blah blah. Even on development sector, in education, in health, but not so much really on housing, right? It is my open request as well as invitation that I am willing to partner with all of you, really, to come out with very cogent, evidence-based research pieces on housing and housing finance. Now, you might say, what new will you tell me, Devarpita? We already know what you have to tell me. But what I came and I wasn't really aware before I came into this room is the wide heterogeneity across even the affordable housing finance and MFI space. Somebody, you are raising funds at 6%. You are raising funds at 18%. What drives that? How really is your company profile, your consumer profile different? You don't have the time to take out 8 months to do a very in-depth analysis, going rigorously down into the financial modeling level, right up to the policy level to do that. I have. That is my job. So please support me, and more, not just me, people like me who are interested in this space, okay, to deliver very high quality research. Because there's another thing which happens, right? Because at the government level, increasingly now these policies are being made at the union government level. Okay? PMFY would not have happened unless the union government would have given its push. Maybe 1 or 2 state governments here and there would have done things on their own. But at this level, imagine somebody who is coming into at a mission director level from a completely different ministry. What access does he cannot go out and talk to 200 different MFIs to understand the issue. There, my paper, which might have come out 2 years back, very nice evidence, very nicely, analytically listing down the challenges, what are the reasons behind the challenges, what do other countries do, what do some states have done, how to address those challenges. That paper is there for him to understand. And it makes your job much easier, right? So please help me,
Sure. We fully get, we need empirical evidence to inform policy.
Right.
And we are all, in some sense, responsible to contribute, and which is what we will do, especially after your appeal. We are committed to this, even otherwise. Just to unpack the solution, we have seen quite a bit of things, but just that we want to get into the solutioning things. We discussed 1 lakh to 10 lakhs, and we are talking about access to financing, but then we are not talking about one thing. So I'm just going to use the next couple of minutes to unpack this. Because 1 lakh to 10 lakh is not the same segment. 1 lakh to 10 lakhs at Habitat, we look at it as 3 segments at least. 1 lakh to 3 lakhs is one segment, 3 lakhs to 5 lakhs is slightly more, higher quantum, higher responsibility, and 5 lakhs to 10 lakhs is the third segment. So what we see is some of the affordable housing finance companies and small finance banks are happy doing 5 lakhs plus. Theoretically, they'll say 3 lakhs onwards, but then the incentive to do a bigger loan is always there. So 5 lakhs to 10 lakhs reasonably taken care. Less than 1 lakh, microfinance, unsecured loan against gold, relatives and friends, that's how the version 1 of PMAY Gramin actually got completed, by mobilizing small value loans from some sources and getting it done. But then we need 1 lakh to 3 lakhs. 1 lakh to 3 lakhs, we saw MFIs cannot go up because of ALM issues, tenure issues, 2-year money. They can't do a 2-year loan of 3 lakhs. It's just becoming too much for the family to repay. And longer term money is not available with the institution, and of course qualifying asset criteria will become a problem. And then there is 3 lakhs to 5 lakhs. So broadly we are looking at saying MFIs going up to say 3 lakhs types, and SFBs and AHFCs coming down to from 5 lakhs level to 3 lakhs level. This is easier said than done. Okay, that's one level on the loan quantum. The other thing is about the method of delivery in itself. So there are again 3 broad levels of method of delivery. The first is direct financing. SBI doing a loan to one customer, and IIFL doing a loan to one customer. Midland doing that loan to one customer. Direct lending on the books of the institution. Then we saw earlier in the day co-lending. What if someone does not have the full capital availability to do that kind of funding? And co-lending is important because large banks, like say for example SBI, there is this joke in the finance industry that if SBI does its work properly, none of us will have a job. Because that's the scale and that's the kind of money which they have. But then their priorities are elsewhere, and as a result challenges come. They cannot go at a household level and do this kind of a loan. Now if the government really pushes SBI may probably go and give the loan also. But then recovering this money is not in the wherewithal of an SBI. So how do we leverage the advantage of SBI while serving this customer. Like how do we access that funding at that low cost, use their network, but then somehow find a way to service this customer. Like that's where a typical co-lending model comes, 80-20, 70-30 types, just for people. Like 80% of the money will come from SBI, 20% will come from the smaller NBFC, and then the lending would happen. So with the same capital, same funding, 5x the number of customers can be serviced, because the NBFC is only lending 20%. First advantage. Second advantage is cost of funding at the client end will also come down, because it's effectively the weighted average of these two hybrid monies, which is actually going to the customer, which is also an advantage. This is the second method. Third is other forms, which is non-financial. Your BC, BF kind of banking correspondent facilitator kind of model, where you do name, number, KYC, due diligence. Do you want a home loan or not? Pick up initial papers and give for a fee or a commission, while the loan will sit on the other lender's books. A combination of these models, or one of these, depending on the organizations, can still serve the same customer. So we are talking about three segments: 1 lakh to 3 lakhs, 3 lakhs to 5 lakhs, 5 lakhs to 10 lakhs in incomes. Direct financing, co-lending, and business facilitation in terms of modes of finance. So this is the matrix of solutions. Like it's not like one solution fits all, definitely not in Bharat scale, which we all know. So we are talking about these kind of models, and in this context, I'll start with Ankur, because you've set up this business and you want to grow. So what are your plans in this, and how do you want to go about it?
In our experience, so as I was earlier mentioning, so now looking at, at one end we have a customer, we have a target segment, and we know what are the attributes they have. On the other end we have the institution, maybe bank or HFC. So looking at, now we are, you can say, better equipped, understanding what kind of credit policy they have, what actually, kind of target segments they can cater. And based on that, we do the partnership and train our people on that. The other is use of technology, so that the TAT for turnaround time for documents and other things, how it can be reduced, so that loan disbursements can happen quickly. So it improves the productivity of the team. So largely understanding the requirement of the financial institution, as well as what kind of target segment, what they can provide, and mapping them, it will help us in the growth.
So basically, you have set up a network of branches, especially NCR neighboring states, where you have front-end teams which can potentially service this customer. You are looking at larger lending institutions who can potentially be your partners. Like, that's where you are as we speak, right? Like, over to you, Piyush. Like, what support you're already doing reasonably well, at least in some segments. But then, if you say like I need 1, 2, 3 to make it 10x types, like what would you say those 1, 2, 3 things quickly?
Sir, I think the first thing is, although I'm working with a particular government, I've shared the name of the government as well. However, there is a difference between the Ministry of Housing and what is the actual land available there on the ground or field, depending on which lot of things keep changing. So for example, to give you a very small example, that if this category of loans which I am already doling out, if I want to do a registered mortgage, it might not go through across a lot of SRO offices. Right? And this is in a state which is already very supportive, which is sharing a lot of information about the whereabouts of the customer, etc. Having said that, I am still not able to do a registered mortgage onto this loan which I am already financing the customer for. Right? So if we could have a mechanism where we could have a GO or a notification where the government could say that, you know what, the registered mortgage can be done at both the assigned lands as well as own land properties. Right? Because this scheme is also dealt in the similar fashion, where you have a concept of assigned land and you have a concept of owned land, self-owned land. So if this could be included, I think that would give me much more confidence in terms of the property that I'm holding and financing for. So I think that is one major thing.
Great, thanks. Amitesh ji, like, you didn't come here and you're not learning from today alone. Like, you've been thinking and like there is a process which is going on. So, what are your thoughts and what is brewing next?
So, as I said earlier, also I think since our institution is a decade-long institution, we have a huge repository of client base, close to 36, 37 lakh, and we were exploring what else we can do. I think we were, and then as an institution, we thought of why not to go for this affordable housing or kind of housing improvement loan. Certainly, as an institution, we do not have experience, but to start up with, we wanted to become a BC of some good bank, I think HFC, and can pass on to lead and build a book on their balance sheet, because as an institution, first of all, we have to learn and upskill our people, build our system and process. I think that's the right way wherein you can learn how to underwrite the product and what is the process of lending and what are the challenges. And I think once we geared up, we learned almost all facets of underwriting this loan, then we can think of having getting a subsidized loan from any big institution, and then probably we are seeing that regulation will also allow us to write some more loan on our balance sheet, and probably it will be a solution for us.
Sure, great. Ranjit ji, what's happening? Like, what can we expect in the next 3-4 years?
So, affordable housing, obviously market is pretty hot, and a lot of incumbent is already taking a claim. So 2-3 things which has happened in last 10-15 years I would like to highlight. Most of the progress has happened in western part of the country, southern part of the country, and little bit in northern part of the country. So entire east and northeast part is already left. There one can go and create bigger institution in one of the, on each estate one can have, right? Opportunity is huge, 1 to 3 lakhs, 3 to 5 lakhs, and 5 to 10 lakhs. Huge opportunity exists. The key challenge between transitioning from MFI to doing a home loan is a staff challenge, mindset challenge, and the working environment. Totally different. The people who is working in the mortgage industry, they will not cope with the challenges there and the routine of the MFI staff. Once they commingle, rift gets created. So it's always separate. Separate requirement, manpower, heavy attrition, huge challenge to, because both products have different requirement of skills. So that is there. Ample supply, ample demand. Just to, the argument which you were saying, 6 to 11%, and we are better off. But every year, lakhs of individuals entering into the jobs, market, and giving mortgage to them, whether informal or formal, it will go up, upward journey will continue. This market from 35 lakh to 1 trillion will happen in next 15 years. As it happens from 6 to 35, focus will be, housing is not a pan-India phenomenon. If you are a company, you have to just focus on continuous journey and create your market in niche segment and just double down there. If you have one branch in Odisha, another branch in Chennai, fourth branch in somewhere in Gujarat, your management and everything will go haywire. So it's always, if the microfinance institution wants to play a big role, they can create capacity in 1 or 2 micro markets they are operating out of the pan-India presence, and then they can double down. Staff has to capacity building is the way forward. Money anyway microfinance will get little costly, that is fine, they will manage. ALM, PSL के through होगा. Securitization mechanism is coming, which will explode this housing market in 10 years. We'll have a wonderful time if you are in mortgage business in decades and onwards.
So I think, and we have a good business going. Best part is asset quality is always holding up. Even if in downturn in COVID, none of the player has faced any challenges. Intention is not an issue. There might be some challenges, but see, this is secured, money will come back. No problem at all.
Thank you, thank you. Anupji, would you like to see anything changing, for the better? I'm sure you said it's already much better globally.
Yeah. So one challenge that Ranjitji just highlighted is the market being concentrated in west and south, and only there's a huge gap in east and the northeast. So one observation there probably is that because these are all migrant states, the earning happens elsewhere. So here there is one model. We were speaking to an entity in Thailand. So typically in Thailand the labor comes from Myanmar. So what that MFI does, it's a very small MFI, probably a book of less than $5 million. What that MFI does is that it gives money to these migrant laborers in Thailand, collects from them in Thailand, but the end use is in Myanmar. So the end use can be for sustenance of the family of the laborer, or it can be for housing as well. Which I think is something that can be tried where an entity which has good presence in say Maharashtra, or has a good presence in say Karnataka, where the migrant population does come, can we explore the property being in Bihar or in Uttar Pradesh, but the borrower being in and the collection happening in Karnataka or Maharashtra. It's very similar, right? People who have pan-India presence do this. But the people who have local presence, can they also try out and then build that portfolio? Is something that is possible. The second thing that I feel is that where the mortgage to GDP ratio is high, they have good practices around title. So that is something that really needs a push in a country like ours. Any push on the title side, as you also said, digital title and all of that, it will have very quick impact on all the statistics that we are looking at, because ultimately the highest amount of energy is also spent in seeing if the property is enforceable or not. And if it is not enforceable, the borrower also has to go to multiple entities, and it just creates that blockage of bandwidth in the entire ecosystem. So title is very important, and I hope that we get to a stage where like 50% of the titles are digitized, and then we get there. So that's all.
Good. Thank you. Thanks. On that note, I think I'll open this for audience questions. We'll probably take about 5 questions. Types. Yeah, Ms. Ishani there. Go ahead.
Thanks, Mani. This is Ishani, I'm a consultant. I have a very basic question, since there's a lot of HFCs in the panel and the room also. What does a product look like for this segment? Say 3 to 10 lakhs. What would be a good product?
So 3 to 6 lakh product is, if you talk about the home construction, self-construction loan. So somebody has a land parcel, even if they don't have land titles, they have Khazra Khazani title. If this is demarketable, and the government can come up with the 100 rupees registered mortgage, because the registered mortgage, some of the states as high as 10% of the loan amount. So that's a use. That will create a lot of wonders. You cannot buy a home in 6 lakhs, 3 to 6 lakhs. It's always self-construction, extension or improvement. Improvement is mostly kind of lap a little bit, but always extension and self-construction is the product. This can be 5 to 8 years or 10 years loan. That will help, and the pricing is itself a different ballgame altogether. EMI capping should be between 6,000 to 12,000. If these criteria are met, those loans will be good enough to be served by the client who will avail this loan, and the portfolio quality will be definitely good. Beyond that, if the EMI is 20,000 plus or something like that, shorter tenure loan, higher interest rate, it will create problem for the whole ecosystem. So I think that way you can create. Thank you.
The other one is about high rejection rate, especially, I know HFCs are very particular about the civil score. Now, when you work in an informal settlement, how civil score is very critical for you to, take that as the gospel truth.
So civil score is one of the criteria, which is not the main criteria. If everything else is fall in line, this is a secured loan, most of the HFC goes for loan by taking deviation and all. So always these are the kind of policy parameters. But obviously they should be not come out as a willful defaulter. They have taken 20 loans out of that. Most of the loan has been written off and civil suit filed and all. But there is a situational aspect, there is a health related issue, and customer is able to demonstrate, and a small loan, 5,000, 10,000, because we have seen 1,500 loans is also creating havoc or the customer getting loan. So that is not that much critical. I'll say people get home loan. The most of the rejection happens in affordable segment is largely the collateral. Still, India is not a unsecured home loan country. Nobody gives unsecured home loan except the MFI. So because we have to also borrow from someone, bank, and in turn when they come, they need some hard collaterals. If we don't provide, and our ratings and everything, so all are interlinked. So that's why I told you social fund which will give credit enhancement for this pool. PSL will bring cheaper fund, targeted intervention, things will pop up and happen.
Okay, just continuation of that similar question, because you talk about the collateral. The case of Jaga Mission, the LRC is clearly says it's mortgageable but not transferable. Is as equal like just ordinary paper. Is legally doesn't tenable. In that case, it's purely go by the trust of the people rather than the collateral. That's our Orissa experience, because the LRC is really legally is not a tenable document. Purely going by the the trust by the people, I think we are able to serve 1,000 plus loans. That's a point for the
So at least fear of losing that title should be there. Otherwise, there is no point. I will give my property anyway. You can't do anything. Please take it. Who cares? So that will again, some of the enticement will happen for default. So because I'll get easily loan by showing this, and I'll not pay, and I'll have no repercussion out of that. So that is the kind of helping them to default. So it will be always without that clause.
So that is the thing, sir. In LRC, when they said it is mortgageable but not alienable, what it did was two things. One, it prevented the family from leveraging the same property elsewhere because that paper was given to the lender. The second thing, the lender was able to raise refinance because they still had a security which was at least theoretically saying mortgageable. So it opened two of the things, while it was very clear even otherwise that the lender, it is not enforceable. So like the document, we say in theory does five things. The security. One, skin in the game for the customer, their stake is there in that paper. Second, prevents them from leveraging it elsewhere. So nobody else is going to give the loan against the same building, including a local financier, because the original document is not with them. Third, the lender theoretically has a right to enforce SARFAESI, which is the legal right to enforce on paper. No one really does that at scale. Fourth, the lender has the ability to raise finance against that paper. So it helps them to raise refinance, and hence that paper is required. Not for enforcing and recovering the money. And fifth, most importantly, unfortunately we don't have NHP in the room, but then the regulator insists that they need to see the security. So they still need to keep it inside their file until the loan is there, if they want to have reasonable chances of availing refinance, which is one major source of refinance. So that paper does five things. Not enforceability is only one of the things, but it still gives skin in the game. ability to refinance, raise refinance and stuff like that. So it helps, which is why we were discussing about lowering the stamp duty on gift deed. Like creating that document is still not going to get a loan from State Bank of India. State Bank of India will say, give me 12 years, 15 years chain of title. So you can't create a document in 2025 and expect to get a loan from State Bank of India. It's still not going to happen. But then that paper will help a Satya or an IAFL or even when MFIs start getting into secured housing, it will help them do it because it still is a security. No one is going to say like 12, 15, 20, 30 year search, 30-year title is required because this paper is security for all legal purposes. So that is where the difference is. Any other question? Patrick, yeah.
No, I just want to say because there's a lot of discussion about title and acceptability of title and how you tie a title to a mortgage and all this kind of stuff. So there is another option, which is title insurance. So in a lot of countries, when there are these types of issues, you get an insurer to come in and say, I am insuring that title. And so then it makes it much easier for the banks and the regulators to all say, okay, well, we'll accept that too, because if there's any issue with the title, somebody else is paying out the mortgage. We're not going to be left with the risk. So just to say that that's another option that does also require the government to step in and kind of do a lot of regulatory and policy work, but it is an option.
It's more like a credit guarantee. Something like a guarantee.
Yeah, except that it's
an insurance company product you launch
the title.
but
yeah.
So although such funds do exist, sir, but sadly the access to such funds is a challenge for housing finance companies.
Yeah. So
we keep coming back to the Bharat scale point, but then thanks Patrick for that point. Anybody else, any other point? Yes, Nuku.
My question would be a little different from what we are talking. Just wanted to know what's happening to the unsecured home improvement loan in the microfinance sector. It was doing well pre-COVID. Suddenly nobody is talking about it. Nobody wants to do it.
Anybody? Anyone from the audience?
Madam, but my second question is that if you are doing it post-COVID also, how is it classified? It is classified as home loan or it is classified as LAP? That is my question.
Unsecured home improvement in the
qualifying
assets.
Achha, unsecured though.
Anyone who is like...
Or if you are not doing it, what will enable you to do it?
Registry refinance.
I think pre-COVID there were bigger MFIs who were having a book of around 3,000 crore plus. They were doing this as a product, but at that time number of participants were less in this segment and number of MFI players were also less, and the case of over-indebtedness was not there, and the regulation was, I think industry was growing, and at that space I think that point of time HFC were also not very active in that segment. But after COVID we realized that the income has gone down, and most of the players, most of the customers, they were looking for a working capital loan. And after this, when MFI, when RBI came, when they allow that any number of institutions can lend to customers provided their FOIR is protected, then I think a lot of participants came, and most of the loans have gone into working capital loan, and the ticket size has also gone up. So the appetite to lend in that space was, I think, got limited, and after this COVID crisis, demonetization, COVID, and this every 1 or 2 years the institution, microfinance institution, were facing asset quality risk also. So it was more to protect their core book. Once this regulation came, and it does, and then post this regulation, it doesn't allow us also to lend on their own book. So I think a lot of events were happening post 2016 onwards, which didn't enable MFIs to diversify more as an asset class also, and post this regulation didn't allow us to lend. So I think these could be the two possible challenges wherein MFI are not thinking in that direction.
Thanks. I think on that note we should probably end the session, but then we had a lot of inputs during the day. If I have to quickly summarize from top of my mind, so Sa-Dhan to you first, like MFIs are there. They are a key link in if we are going to solve the Bharat scale problem. Couple of things come top of the mind, like there has to be some way to relocate the qualifying asset definition which will enable MFIs, at least the bigger, better, well-regulated, whatever criteria. I'm sure things may not open up overnight for all the institutions. We are also wanting to make a cautious approach to it. So at some point, there has to be a mechanism which will enable them to do it directly in their books. Second, of course, is making funds available in this segment at tenure, which will take care of ALM, and at cost, which will eventually impact the cost to customers. So there has to be a mechanism where we are somehow able to classify and highlight the segment of 1 lakh to 10 lakhs, or if not 1 lakh to 10 lakhs, at least 1 lakh to 5 lakhs home loan for first-time home buyers, right? Like that's why we are making the PMAY case as well, that first-time home buyers, 1 lakh to 5 lakhs, as an asset class needs to be looked at differently and not give the whole real estate paint to this and then look at it bad, right? Like on the subject of bad apples, like we agree that like there are few instances, few markets, few entities, few customers who are not in a great position. We are not pushing for over leveraging into this sector. The whole idea is if an MFI has 100 clients, 20 of them may still not be in a position to repay. So we are not talking about that 20, like how do we identify the balance 60-80% of clients who can avail a structured, formal, medium-term loan and repay. Like similarly, there are some companies going through not so great times, but then many companies are doing perfectly fine. So can we choose the good companies, good customers, and give them the right product, which is what they require. So which is something which we will have to look at, sir, on the MFI front. While the government needs to support it, like PMAY database itself is a huge place to start with. Like we are going to see 3 crore houses getting built in the 5 years if they need access to formal financing. There has to be a platform where lenders are able to identify who those 3 crore people are, to even ask, do you even want a home loan or not? And that would then reduce the funnel, and then they create the suitable product and service. Of course, privacy laws are there, like so we can create some formal systems, because at some point the lenders are also contributing to the goal of housing for all. So it should be seen as an enabling mechanism rather than breach of privacy. So there should be a case for that as well. In terms of title security, we know Swamitwa is in progress. It will take a few years to come. Alternate mechanisms in terms of reduced stamp duty on gift deeds. Some states have taken the lead. Maybe more states to take is one option. The other option, other requirement is also on the stamp duty on the mortgage. Like if we go to the stage of mortgage, again there is another stamp duty which is attracted more than the cost. It's also a hassle of going to the SRO and getting this paperwork done for a small loan of 2 lakhs, 3 lakhs. So there is a case for reducing or ease on process. Again, we are not asking for the entire housing loan sector, but then again, if we can qualify a small category and like kind of prioritize, to start with it could even be PMAY beneficiaries. And then we expand it over a period of time to non-PMAY as well. So those are some points which have come out clearly. Again, we are not talking about one solution fits all. So we are fine with direct financing, we are fine with co-lending options, we are trying some models. Pilot Habitat is doing some pilots with some of the institutions. We had conversations with the National Housing Bank, they are willing to experiment with some of the MFIs. So we are happy with that, we are happy to promote that. Banking correspondent business facilitation is happening as we speak. Again, we need to scale it up, which means there has to be more ease of doing business across companies and between companies and government in some shape and form. So we'll try and see, we'll come up with all these recommendations to the appropriate departments and ministries. Any other thing, we are happy to receive, so we have Dr. Saibal here, Prasanna and Nupur from Habitat, so we are happy to take your input. We'll try and incorporate and give a comprehensive recommendations to all concerned in an appropriate manner. Mr. Satish, you want to add something to this? Amit, sorry. Amit sat in. Okay, sorry.
That's
sorry,
fine.
sorry. Yeah, go ahead.
No, that's fine.
No, please.
No, they know all technical points they have covered, and maybe see there are a lot of things on the execution side, which I feel because of which the micro housing finance may have issues going forward, and whosoever is purely from housing finance will understand. See, if we were to push Pradhan Mantri Awas Yojana, then registry refinance should be allowed, is my point. Anyways, we have talked of rationalization of the stamp duty. And if we really need to push the what we call as a wholly owned subsidiary of microfinance institutions, then whatever capital has been put into as a net worth into housing finance companies should be classified into what we call as a qualifying assets. Very, very important tool for us. National Housing Bank, I don't know whether a lot of people know, already have a rural housing finance fund. But the only issue why it is not picked up by the people like us who are also doing microfinance is because they have a spread cap. And if you take care of the OPEX plus the spread cap, it doesn't make a business sense for us to distribute those funds. That is why the majority of the financing is happening into affordable housing finance. The fund is there with National Housing Bank. Then we have what we call as a recourse to the securitization markets. In the securitization market, what they have done is they have a minimum MHP criteria, which is good enough because certain amount of seasoning should be there. But in case of small home loans, whereby people like microfinance companies wants the recourse to the funds, these criteria can be really waived off. Then there is an issue that let us suppose if he is a microfinance institution, and Sa-Dhan being almost, we are like 900 crores in housing finance itself, and group is around almost 12,000 crore. So if I were to give a term loan to him, then as per the National Housing Bank guidelines, it will be classified as a non-HL. So if the end use of the fund is basically distribution for building up the houses or renovation to the houses, then the entire certification of the end use can be done and it can be given as a refinance to people like small micro housing finance companies by larger players like us or maybe the banks and other things. So intercorporate lending can be restricted within the group, but if we are promoting the housing finance function, then it should be classified like that. There are very strict criteria of PBC. It is important because we are a housing finance company, so 60% of it should go into home loans. But there are event risks which happens because COVID, the first offtake will be obviously towards the business and livelihood, and then comes the home loans. So PBC is something which really needs to be taken care of with some flexibility, I always feel. And especially the issues with all the small finance companies is when you are actually pumping in the equity, because the cash component also gets accounted into that and that dequalifies a lot of these housing finance companies. And last but not the least, the entire rural is not a lifestyle funding. Each one of them has got a house or a land. So whatever the micro housing finance companies will do, either they will help in renovation, extension, building up, repairing, these kind of activities. But there is no single classification in the guidelines also that how do we define renovation. So let us suppose if you give a home loan to a guy who's actually building up a door to make it livable, the word is livable, then these are classified as non-HL. Now the only issue with big players is that non-HL may not be a problem because we can always add on to the home loans, but if we classify them as non-HL, then the customer is getting deprived of the subsidized rate of interest which is there in the home loans. So that is the disadvantage to the customer, and this is a forum which is very close to my heart. I always say that the word says that we are inclusion of micro housing finance. See, we are dealing with a customer of 1 to 3 lakhs, and as you rightly said, 3 to 5, and 10 is basically a little bit upper class. I have been suggesting, and it is my request that we represent it again to the various forums, that the 10 lakhs, the DPD classifications, should be 120 days and above, because anyways we are securing the assets, and a lot of these people just for say around 10 days or 15 days are classified as NPAs, and again they are moving back to the same regime of 50% or 40% because in the formal segment they will not be given the loans. So basically the DPD classifications as per the income slabs should happen going forward. It will help
the credit history of a lot of these people. And one innovative idea is that somebody was saying that the government of India through NHB should take the what we call as the hedge risk of 5% on their balance sheet. To the understanding that I have, they will never do that. The better way is that we go for a monetization. So let us suppose if there is a recourse to the what we call as asset reconstruction companies, or they can take the NPAs and the government and actually monetize. और जितने भी गरीब लोगों को वो घर देना चाहते हैं, ये बने बनाए घर हैं, तो ये उन्हें दे सकते हैं. So I think this is an idea which can be really worked on. It is out of box, but I don't think so. They are going to take a balance sheet hit of a currency swap. The list is very big, but because of the paucity of the time, these are very important points which will help on the ground level to increase the microfinance and small housing finance. Pradhan Mantri Awas Yojana is a very good initiative, but let me tell you that if we don't open Lal Dora lands whereby these 25,000 or 30,000 earning people make a house of 15 lakhs to 20 lakhs, because those are not the guys who are going to own DLFs. And if we don't do those changes in the policies at the SRO levels, and maybe the recognition of these properties as authorized properties, especially in the cases whereby 70% of the habitation is surviving for more than 20 years, the value is not going to be unlocked and it's not going to percolate to the right kind of people. So these are certain things. And let me tell you, in India, especially in Delhi, some few $1 trillion of property are lying because the demolition lists are not revised for more than 25 years. So those are the properties on which the financing cannot happen, and it's a great value. So that's from my side. The list is endless, but I'm certainly going to share it.
We've had the opportunity to hear you in Chennai Conclave as well, the earlier version of this. Thanks for making it very straight and to the point. And of course, we continue to engage, and we definitely include these in the recommendations when we prepare and make it ready. Thank you. Thanks to Sa-Dhan and Habitat for giving us this opportunity. Thanks to all the panelists. It was wonderful speaking with you all. Thank you very much.
Thank you, sir. I just request.
Wait for it.
I request A sir to kindly remember the total of appreciation.
Let me start with the ladies who open the
All of you can have a group photo, please. Pose for a photo after this.
Please, sir, post. Great job. Thank you.
Please come forward for a group photo.
We'll have a group photo. I think we'll have all taken. Patrick is also there. One let us take with the.
Sure.
And then we can.
Take the next one.
First.
Come for a group photo. All of you, please do.
Money
Come.
Thank you.
Thank you.
Thank you very much.
event. Thank you all, thank you Habitat for Humanity for supporting us and working together to do this, organize this event. And thank you all the participants. Thank you MORD, thank you NHP. And we have already started working. It is not just, this is the second in the line about this discussion. So we are coming up with a paper, a policy paper. We have started working with NHP, we have started working with MORD. One of the areas we need to do, we were discussing about it, is the capacity building side. Very soon we will start that one. Thank you very much. Thank you.